TJ the Wheel Deal coming at you live with another episode of Wheelers. We've got one of the masterminds behind the wheel tracker, Bill White, not in his Jeep because he's got a beautiful home over there in Florida somewhere with all the other rich people, Bill. And we've got Dallas Muscle Matthew over there flexing his spiritual muscle today as well. I love the shirt, Dallas. From now exploring my options, I don't know what you did, bro, but you somehow got like one of the best names for a whole channel. I'm like legit. I'm like, I got jelly belly going on in a positive way. I'm happy for it.
Thank you.
How are you guys doing, Bill? How's everything going, dude? I feel like you kind of like you stopped calling me a little bit. You know, it's like I feel like that girl from high school, dude. Now I know what I did to a couple of girls. I feel kind of shitty about it. Like,
yeah,
I doesn't ring as much. I don't like Busy Bill.
I don't like Busy Bill either, and I actually feel bad not being able to get on your lives every day. I try to hop in there and watch a little bit. I always watch them on delay, but I try to at least get in there and say hi to everyone in the chat, just and let you know that I'm actually still there supporting you. But I do watch delayed, I guess, when I get home from work.
Right on. And Dallas, can I ask you a question, brother? The spiritual question. So might as well start out with it. You're here rocking the shirt. I added the scripture a day segment. I've only done it once. I just ran out of time today because I needed to go do husband stuff. It was a discussion that was had here at the house, but at the end of the day, I don't like feeling like I'm hiding who I am, if you will, if that makes sense. So I just felt like if I'm going to lose anyone over something that I believe so strongly in, like I was just totally cool with it, dude. It is what it is. Because I feel like I built the community strong enough that the people that matter, they're there. You know what I mean? They're there. And I'm not saying that the new person doesn't matter, but the reality is you guys have helped rock with me from the beginning or close to it. And we've gotten to this point. And if it's in the cards to get to another level, we'll get there. If not, it's okay, dude. Jesus only had 12. You know what I'm saying? So to me, like it's all good. Welcome, Garcia. Appreciate you supporting and joining me, man. So what are your thoughts on that? What are your thoughts on that, Dallas?
I mean, it's such a huge part of you. I think you would be silly not to include it as part of your videos. It may be for some people, it may not be for some people, but it also might pique someone's interest, which leads them down the road to salvation ultimately, which is our goal as Christians, is to share the gospel. So, that means, I know that means much more to you than potential views or someone unsubscribing. So I definitely applaud what you're doing with that.
Yeah, because as the platform gets bigger, the voice gets louder, if you will. I just want to make sure that the focus isn't on me.
Yeah.
Because I'm just a conduit. I'm just a vessel. I happen to be pretty decent at selling puts and calls. But, dude, there's a much more important game plan here. You know what I mean? And I just don't want people to lose sight of that because this is my biggest battle, dude. One day I'm going to show the scripture that gives me the hardest. My struggle is you can't serve money and mammon, right? At the same time, it's like you got to pick a side and do it. I don't know why they snuck that one in there because I don't like that one. You know what I'm saying? Like it's the scripture that challenges me the most. I thought that was a dirty little sneak there. Anyway, Garcia, welcome to Wheelers, my man. How are you? How's life treating you?
Doing really well. And yeah, I was there I don't catch lives too often, but I was there today when we're talking about including that segment at the end, and I really did like it. It's like Dallas says, it's a big part of your identity and what your overall goal of what you want to do. So I think it's good that you're including it. And if it's not for someone, the ones who don't want to, they'll click away at the end, but there might be some people that stick around, curiosity, and they might, take them down that path.
Yeah. Facts. Mm-hmm. So today's segment, guys, let's get into it because I feel like we're gonna unpack a lot here by accident. This was a topic that it's like like sometimes you feel like God speaks to you or whatever. But I was like, I feel like this is gonna be like a super exciting topic because I always make jokes like I'm not a librarian, like I don't like to research like the SoFi Weekly guys. I could definitely not do what Amit does and learn like way too much about a lot of different stuff to have like essentially a pseudo CNBC channel going now, right? Like I couldn't do that. Like there's just not enough hours in the day for me to take in that kind of information. And then to come with the delivery that it comes with, it's pretty damn impressive what Amit is doing. But I'm not able to do that. But I do have a couple of go-to moves when it comes to doing my surface level of due diligence, just calling it what it is. Because I don't dig deep. I pay people to dig deep for me. That's just, I mean, just 100% transparency on that. That is, I focus on what I'm good at, and that ain't it. You know what I'm saying? Like that ain't it. Just being transparent with you guys. But let's start with Bill, because I feel like Bill, I know for a fact you're better at this because I got a spreadsheet on my computer that says you're way better at this shit than I could even dream of being, Bill. So, what are 3 go-to moves that you could share with the audience? Be like, hey, I give you a ticker, and you're interested because it starts there, right? You have to be interested first and foremost. And, like, what's the process? And are there like 3 sites that you use? Like, what are the tools? What are your tools to research a company and then decide the very first thing that's super important, in my opinion, is it even worthy of being an investment or is it a trade of anything? Floor is yours, Bill, and I'm going to do the timestamp.
Yeah, so I think before I even look at numbers, I think you would probably agree with this. I don't own many different tickers. You know, I have a core group of tickers that I own. Everything else is really trades. So if I'm going to really dump a lot of money into a stock, I first look at the industry. Is it something that I want to be invested in? Now, if it's, you know, in an industry that I want to be invested in, then I start doing comparisons versus other companies in that industry. I start diving deeper into it. You know, even one of the newer things that I look for is, does it have a community around it? And, you know, the biggest thing for me, it's not even so much of how the stock price would react to that community, because I mean, look at SoFi, it's not going anywhere, but it's more, can they am I getting the due diligence from someone else? Even if I can do it myself, I'm not going to sit there and, you know, spend the time doing it. I might put some initial time in there and, you know, see if it makes sense. But on a go forward basis, you know, I kind of want some of the information coming my way. But I'm assuming that you're talking about, hey, you know, from a numbers perspective, like what are the kind of, you know, maybe, or valuation perspective, what are the things that you look for? A lot of people, you know, especially if you're invested in growth companies, they tend to go right for like the growth rates and things like that. I always start right at the balance sheet. I always make sure they are, you know, on a good, you know, have a good solid foundation. You know, I'll look at their revenue. I'll look at their cash on hand compared to versus their debt. You know, just look at making sure they don't have a lot of, you know, maybe their current ratio. So your current assets versus your current liabilities, just kind of like minor things in there. And then I go through the balance sheet and I really see if there's any kind of outlier accounts that could, you know, help me kind of, you know, get a little bit of an edge. You know, I just as an example with Palantir, they have some sort of liability. It's like a deferred revenue. That told me that they were like getting a lot of cash up front, but they didn't earn the revenue. So it's almost like that their cash flow was going to be better than the actual P&L of the company. And this was earlier on, not so much right now. And so that got me, you know, just knowing that they had a big pipeline of, you know, kind of contracts out there that they were already receiving money for. So I always kind of start with the balance sheet, and then I go to the cash flow statement. And I want to see how they're doing in their overall cash flow. And I don't focus on everything on the cash flow statement. It's really their cash flow from operations and their CapEx, because a lot of things can get convoluted in a cash flow statement. You know, you could issue more, you can dilute the shareholders and have a bunch of money come in, and that pops up as a positive in, right, you know, in the investing part of the investing part, the final part there. I can't even think about it off the top of my head. Financing part of the cash flow statement. So that's really irrelevant at that point. You really want to know how they're doing from operations, back out CapEx, and kind of go from there. And then I start going into the growth rate. So it's kind of like a 3-step process where it's balance sheet, cash flow statement, and then go into the growth rates of the revenue. And kind of start there. There's a lot of details in between, but I kind of want to keep it high level at this point.
I like it. So essentially, you decide, just to kind of summarize, you decide whether or not you want to be in the industry at all, if you want to be in the company, and then you want to see if maybe there's a source that you trust already. You can kind of lean on them to save a little bit of time. And then after that, because you're a CFO by trade, it seems like you just like to dig into the numbers. Like I feel like you're probably numbers first and then story second. Is that fair? Because I'm definitely story sucker. Like I'm a sucker for a good story, and then I hope that the numbers can halfway justify the story, and that kind of bites me in the ass a little bit. Like I mean, just it's happened a few times.
Yeah, I would say I'm definitely numbers first on making the decision. But a lot of times I won't even look into the numbers if there isn't a good story around it.
Okay.
If that makes sense. But but the numbers have to play out for me to actually make the investment.
Yeah, absolutely. I mean, it's all gotta tie together, you know. And it. So how much would you say? How much time would you say it takes you to do due diligence before you can say, hey, I'm going to rock with these guys for at least a season? And what I mean by a season is 4 earnings reports, right? It's like a relationship. You got to go through the 4 seasons with your potential partner, because people change like the weather. It's kind of weird. This is like they've done studies on this kind of stuff, and I feel like I can't really formulate a very long-term thesis unless I go through an entire season with the company, so I can learn the cyclical nature of the business. Because some seasons are hotter than others for companies, right? Like some, it's like we already know that Q2 is not that great for SoFi. I wouldn't have known it if I hadn't gone through that season three times already with them, if that makes sense. So what kind of time investment are we talking about? Because the reason that I don't respond too often to tickers is because the time that it really takes me to sink my teeth into these things, if I'm really going to do it, it's a lot more than I'm willing to invest more often.
Yeah, I think it really kind of depends for me because it took me years and years, and I like for something like Tesla, because the numbers never did make sense. It ran all the way up to I think $400. I said, this is ridiculous, you know. So I missed the whole run up, but then I also missed the whole drawdown, right? So now I'm getting into Tesla, but it's starting to make a hell of a lot more sense to me.
So what you're saying is when it ran up to 414, you weren't part of that train? You weren't part of the Tesla train?
No, the only thing I had done at that point was sell puts on Tesla.
Okay.
But with something like Palantir, I mean, that took me a couple hours. I knew it. I saw that one right away. It all made sense to me. And I happened to see a few videos on things that they were doing with some manufacturing companies and just being in that industry.
Well, you work for that railroad company, right? That is doing business with Palantir.
Yeah. They eventually did a spinoff. They call it Trinity Industries. They did a spinoff, but I worked for Trinity Industries for like 12, 13 years. But I would say 4 of those years was after the spinoff. It was for a different company. But yeah, I know Trinity Industries very well. But I knew a lot of the pain points that company was having. I was dealing with them. And when I found out that they had signed up with Palantir, it made all sense in the world because it really did cure all the pain points. So I kind of just knew right away, like that one just kind of whacked me in the face. It's easy to say after it's gone up, as much as it has, but I really did. That one only took me a couple hours, but something like Tesla took me years. I tend to, if I'm interested in a stock and it's paying really good premiums, and a few hours into just some financial due diligence, I'm fine with owning a stock anyway. It won't take me much to actually, start trading it or, selling puts on it. But normally when that happens, I kind of see that as the seasons. I'll go through many different trades with the stock and do more due diligence over time. And then it may turn into an investment at that point. But it tends to only pop into my account if, from when I start looking at it, it goes down because I'm looking for a better price. And it's probably at a fault because I've missed a lot of stocks that, I probably just could have, gone deeper into it, but I just never did. I'm typically waiting for it to go down and build out a position. So I miss a lot of things that way, but I don't have any real losers, if that makes sense.
Sure.
So,
No, I get it. Dallas. What's going on, Dallas? Before I get your input, I'd like to talk about what's different about your channel here, because it was Dallas Matthew, but now it says Dallas Matthew exploring my options. So what brought about the change? Walk me through the mindset, and then we'll get into your brain a little bit as far as what are your go-to moves for doing due diligence, because I want to get clarification, because I remember you being on this pod several times saying you don't even do due diligence on some of the companies because there's nothing that you expect to find that nobody else hasn't already found. So talk to me about this first. Guys, please subscribe to Dallas. We're trying to get Dallas and Garcia there. Are you already at 1,000 though, right, Garcia?
Really close, really
Yeah.
close.
So let's
900
get
something.
that done tonight, guys. We've got 67 people live on YouTube. We've got 204 people that have clicked the link already on X. It's gonna gather a little bit of steam. There's other YouTubers that are a lot more popular than I am. So once they're done, we usually get some of that spillover. But if y'all could please do me a favor and like Garcia's and Dallas exploring options. Walk me through exploring my options. What happened there, Dallas?
I wanted something a little more like unique than just my name. I've always kind of wanted to have something with options in the actual name of the channel, and this was actually something I thought of probably like 4 or 5 months ago, but I couldn't really ever like pull the trigger. But I was thinking about it, and I'm like, Adam from In the Money has always been one of my favorite options channels. He hasn't really posted a lot because I know he's going through some health stuff, but like your channel's In the Money. Most people who aren't, in our world have no idea what that means. But so it's a little thought provoking, to get people to click on the channel. Also, anyone that searches, you just options now in YouTube, I'll probably come up in there somewhere because it's in my title. But when I thought about it, the way I came up with it was kind of like that's what we do, not only in the market but in life. We're constantly exploring our different options, whether that's your wife, who you want to marry, or what job you want, but also inside the different investment worlds, it's like I'm exploring my options. I'm looking at, do I want to put my money over here in this investment property? Crypto is supposed to be in the last year of the 4-year cycle. Do I want to, allocate some money to that? If I'm bullish on a particular company, let's explore the options. Should I buy shares? Should I look at some leaps? Should I, just start wheeling it, sell some puts if I'm bullish? So it's kind of what we do in the market as market participants. We're constantly exploring all of our options and deciding where the most alpha is at for every dollar that we put to work invested. So, not only is my channel, specifically focused on stock options, but we're constantly just exploring all options in the market and in life. And I thought that would be just a cool, like, little play on words, so that's why I did it.
I like it, man, and I definitely wish you all the success with that.
I was surprised no one had it. I was like, man, someone might already have this.
Me too. Because when I saw it earlier, because the video popped up, because you had posted something right before we came on tonight, and it was one of those like, why didn't I think of that? You know what I mean? It was that kind of moment for me, and I was like, well, that's because everybody thinks at their own pace, right?
I even tried going to like Chat GPT, and like you can have them do anything. Like I typed in like options and like all these different keywords and tried to get it to come up with something like really cool. I actually thought of that 100% on my own as far as exploring my options. It gave me a bunch of like weird names. So I'm like, nah, but yeah. I just wanted to present real quick. I wanted to present real quick just because I typed out my different things, because I know a lot of people like to just have something visible. So let's click this and then share.
This guy,
So
right?
can you see that?
Yeah, chart, Vanguard,
All
and
right, sweet.
BlackRock.
So these are, I wanted to think of a few things that like I didn't think the other panelists would say. That way we're not just all repeating the same thing. So some of the first things that I do is number one, I just pull up the chart because this will let me know the level of urgency that I need to have in making the decision of whether I want to be a part of this company or not. Because if I had know nothing about Palantir and I pulled up a Palantir chart right now, it's so far removed from its moving averages that I know, okay, I'm probably not going to want to buy up here. So it gives me a little bit more time as far as, doing my research to look into it. Whereas if I look at something and it's down near its 200 moving average, something like that, then I'm like, okay, this might need to be a little more expedited research because this might be ready to move up. So
Right.
that's just the very first thing I do is look at the chart. Then I look if
So what you're saying is if you see something on the technicals, it creates a little more urgency for you to get through the due diligence a little bit faster.
exactly. Yep. Next, I look at does Vanguard and BlackRock own shares of this company as well? Because I want to ride the ship to prosperity with them because that's where they're going. So Vanguard and BlackRock are pretty much the two most powerful entities in the whole world. We think they're just basically hedge funds, but if you go down the rabbit hole, they pretty much control everything. So if Vanguard and BlackRock own the company that I'm looking at, it gives me a little bit more confidence in, that this is at least a decent investment that they were looking to take a chance on as well. Next thing I do is I look at the market cap just because for my particular investment style, I tend not to go to a whole bunch of small caps or certainly micro caps. So what I like to do is if I'm looking at a particular sector, such as right here, SMH, I actually like doing this on Robinhood. If you just actually type in SMH and then click on it,
So
it'll show you.
what is SMH? I thought that was shaking my head.
So SMH is the
Now I'm shaking my head. What the hell is SMH?
it's the semiconductor ETF. So
I
if I'm
use
looking,
SOXL, bro. I'm leveraged, baby.
okay, well, most people aren't going to leverage right away if they're just looking into an investment, right? So if I'm looking at, okay, I'm bullish on semiconductors and I just Google semiconductor ETF and I find out SMH, then I will look at the holdings of SMH and I will look at like the top 3 or 4 holdings of SMH because they're going to allocate the majority of their money to the companies they have the most confidence in. So whatever the highest caps are in these different ETFs, those are what I like to kind of make my own little mini ETF, which basically is what we all do in our portfolios anyway.
Yes.
So that's what I do. Next, I go to tipranks.com. So I like TipRanks because it's kind of like a conglomerate of like different analysts. So I like going on TipRanks and it puts out this cool graph where it'll take like all the analysts and it'll take like the top estimates for the stock and like the lower one and then like create an average. And it'll tell you like what the average of those different analyst price targets are as far as expectations. So if you just pull up your favorite stock, and if the consensus is like way off, or way beneath kind of where the stock is now, that'll give you a little bit of an idea as to, I could be buying this at a really good price because maybe it's $10 and the analyst consensus targets are like 15 to $20. But if it's kind of like if the consensus for these price targets is pretty much right where the stock already is, that'll kind of give me a little bit of hesitancy as far as am I making a good entry point.
So can you clarify when people see this price target 15 and the stock's at like 850, like SoFi, whatever it is, right? What does that 15 mean? When's the time frame on that? Or are they saying that that's their fair market value? Like for those people that don't know, can you give a little clarification there? Because I didn't know that right away because I used to utilize tip runs. Or like even on Yahoo, right? Because one of the first things that I would look at is where's the price at, and where are the experts saying that it's supposed to be? And then I'd be like, oh, that's a 2x, that's a 3x. It's got to be a great buy, and that shit never made me money, yo. So I mean, what does that even mean when these freaking analysts that don't know preferred stock or livestock are throwing out that's a Wall Street, the movie Wall Street, the line from there. When you see a price target like that, what does that do in your brain? Like what sensors does it trigger?
So I know for tip ranks, it's 12-month price targets. It pretty much should be like that across the board. And you're right. Like I started in the market swing trading. So tip ranks really helped me because I would combine like these analyst targets with charts and everything else, give me a good idea. Like, okay, a lot of people more than just me think this can go up to whatever price, but I mean, I know tip ranks has like their free version, then they have a paid version where you can like get access to like, it'll rank the analysts and it'll hold them accountable. Like it gives them a rank on their past calls. So you can see like, okay, these particular analysts have been really successful in their past calls. And that'll give you a better indication of like, is this some guy who just graduated from wherever, or is this someone who has some really good experience? It's not like you said, you can't, I didn't look up the analysts price targets for SoFi, but if it is, there are a lot of situations where those targets are a lot higher than where the stock is currently at. So it's just another tool. It's not the end all be all, but have found it to be helpful in the past.
Hey Dallas,
Dallas,
real quick on the market cap for SMH. Are you trying to pick the ones with the highest market cap or the one with the most allocation in that fund? I don't know how SMH works their fund if it starts with the highest market cap, but what are you focusing on there? Their biggest allocation tickers or the largest market cap in the fund?
They tend to like mesh a lot. I'm looking for the largest market cap because that brings safety. So for like EVs, if you want an EV ETF, like Tesla is obviously the largest market cap. Normally there's so much overlap to where like I looked at SMH prior to coming on the show, and like NVIDIA is their biggest holding, which also happens to be the largest market cap. But they don't do that in particular. So their top three, I think their second was like Taiwan Semiconductor, and like AMD was kind of like fourth. So I would have probably had NVIDIA and then AMD as my second if I was building my own little ETF. But they're not doing it by market cap. I like to look at their top holdings and then also just the market caps in general, and then try to find some overlap. But SMH doesn't rank their holdings by highest market cap to lowest. That's just whatever they're most bullish on. Obviously, they're going to have as the highest allocations.
Gotcha. I like it, man. I like it so far. And then obviously you utilize CNBC and YouTube like most everyone else.
Yeah, I definitely like I like CNBC better just because it's not as sensational. Like if you go straight to YouTube and type in Palantir or something, it's like sell it all, or like all these crazy things just to get people
the clickbait thumbnail that catches your eye.
Yeah, so those are not the best. Obviously, once you are a little more familiar with the company, like you learn kind of who is using those titles just to get you to click, and then who actually is like about this stock. With CNBC, I like to just type the company into the search bar and then watch all the videos from the last couple months, like go back to one previous earnings report. And normally if it's like a good company, they'll come on Kramer or they'll come on and talk about the report. And then you kind of get to follow like the progression of videos. So normally it's like 10 videos. And then lastly, Robinhood actually has some pretty good things I look at. So I like to actually click on the stock. And then if you scroll down, they have this little dot plot where it'll show expected EPS and then actual EPS. And one's like a dark green circle and one's like a light green circle. So I like to see that going up and to the right, and I like to see actual above expected. that's just like a little 5-second thing you can look at. And like most of the time, if that chart's going up, then the stock's also going up as well. And then if you see sometimes like the light green is like way underneath the dark green, then there might have been a problem in the last report. So, I like to look at that as well. And even Robinhood has a nice like a fair value price. So you can take that into consideration as well. Like, is this fair value way above or way below, and things like that.
Right below that, it also has certainty level, and on the majority of stocks, it says highly uncertain. So,
yeah.
Yes. Yeah, the stewardship, right? Like on the stewardship and stuff like that.
Yeah.
Like, what does that mean?
It's like that. Thanks for the information that you're not so sure of. But.
I hear you. Garcia, my man, I know you've been quiet. You've been sitting there patiently for 20 minutes or so.
I got a lot to say.
What? Because I mean, you obviously went full port there for a little while. You've scaled back since, because I follow you closely on X, and I watch, probably at least 25 to 30% of the videos that you put out. Same with Dallas. I mean, because guys, there's just not enough hours in the day sometimes to get it all in. You landed on Palantir. So what was your due diligence like? I mean, what do you go through? Like, what is the process there in that beautiful mind of yours that says, hey, I'm willing to put, 50, 60, 70% of my net worth into this one company. And I think I can outperform, doing it this way versus trying to be ADHD, LMNOP, OCD, and have 10% here, 10 times over, and trying to form your own little Garcia Capital ETF.
Yeah.
Walk me through that.
That was kind of one of the first decisions that I made, is that, like, I know my own limitations. Like, I'm not like a stock analyst where I'm going to be looking at all these different companies and start saying, okay, this is a good company, this is a bad one. If I make memes about companies, it's really just, talking shit on PayPal and stuff. But as far as analyzing the company, the fundamentals, the balance sheets and all that, like, I'm not that great at it. I only focused on, let's say on Palantir or on the other three companies that I'm kind of allocating a little bit into. I made that decision that I said, you know what, I'm just going to focus on the one company that I'm going to understand, and I'm going to dedicate time. And it took me a long time. Like with Bill White, he said that it was pretty quick. Like, he came to that decision. For me, it took a couple months before I realized, okay, like this is the company that I'm going to start really putting heavy capital into. And that was really just watching a lot of videos from the company themselves, AIPs, watching testimonials, really just looking at the founders themselves. So the people that founded the company, the people who are involved with that company, like these people have been crushing it in every other company they've been involved with. So they're not here to just mess around, screw people over, make a quick buck, and then leave. These guys, Peter Thiel came from the PayPal mafia in the early 2000s. Right. And then he brought in Alex Karp and all these other executives, and now they have the Palantir. Now they're known as the Palantir Mafia, where now people who are in the company, now they're going out and starting their own very successful companies. So that tells you a lot. And another thing was with the balance sheet, with what Bill White was talking about. I kind of looked at the top and bottom line. I just kept it very simple. I didn't really look at the entire balance sheet and their income statements, but I just kind of looked at the main ones, and I said, okay, is it making sense? Are they growing over time? Are there any glaring numbers that I should be worried about? And after I saw their top and bottom line is growing, their operating margins are good, their liabilities aren't really that, they're not getting out of hand. There's nothing concerning. And then the cherry on top, for me, what sealed the deal, what gave me the confidence to really put heavy capital behind was their lack of debt. The fact that they had no debt is what, for me, was going to give me the peace of mind that I'm not going to have to worry about waking up tomorrow. Oh shit, Palantir is on their way to bankruptcy. There was a black swan event. something happened in the U.S. Housing market or whatever, and it affected Palantir in a way where now they're going out of business.
Right.
So I knew it wouldn't be because of Palantir's own doing, but I didn't want their debt to be somehow attached to some type of black swan event in the future. So for me, that was one of the biggest factors was the fact that they had no debt. And I kind of wrote down some things that I kind of look at. One thing that I was looking at was the TAM. Like, what is the total addressable market that this company is going to be able to expand into? And, I don't have a direct number. I don't have an exact number in mind where I'm like, oh, it's a $20 billion or $1 trillion. I don't know what the TAM is. But what I do know is that they're nowhere near close to approaching that maximum size or to where they'll start plateauing. Like the whole SAP systems, the whole all these software, corporate software programs that are everywhere. And I've worked with them myself, and they're terrible. Some of these programs are absolutely terrible. They look like they were developed in the 90s. And you're trying to find inventory. You're trying to find out whether you have a product or not. And it's giving you this outdated data. Like it's not useful anymore. And it's just so clunky, so slow. And yet these multi-billion-dollar corporations are relying on this software. So the fact that Palantir can eventually, start replacing some of these systems, because it takes a long time to replace those systems. Another thing that I noticed with Palantir is the fact that they sued the government, they won. They started winning contracts with the Army, with the department that they actually sued. So that tells me that they're not able to be swatted around. The Army wasn't able to say, no, you know what? You sued us. We're no longer going to use you. You're banned from being used in the military. They couldn't. They were that good. The fact that they were that good, that gave me another bit of confidence to start scaling into it.
Right.
Another one is the overarching theme, which right now it's AI. The overarching theme for the next couple of years is going to be all AI. What can it do? How big can it get? And Palantir is going to be one of those companies involved, along with NVIDIA and all those other companies. I went through the top and bottom line. One of them that I just added today. Is it hated or misunderstood by Jim Cramer, Ross Gerber, or Gordon Johnson? And check with Palantir. Like, so far, all three of those guys don't like the company. They don't understand it. They're talking shit on it. So it's just a fun one for me. Like, it's a nice cherry on top that these guys don't like it. So that's kind of what that's kind of what I'm kind of going based off of. Mm-hmm. And I am scaling back just a tiny bit though. Like it's really just like 5% of the portfolio, 10% of the portfolio that's kind of been scaled into TSOL.
Innovix. I see some puts on Innovix.
Yep. Yeah. Selling puts on Innovix, and I'm buying shares as well. And I'm buying shares on Rocket Lab and TSOL. So, but as of right now, I'm still kind of holding all four, and I'm just going to keep allocating between all four. As of right now, I haven't bought any Palantir shares, but just managing some covered calls. So
I gotcha. Well, I'm going to be pretty quick and concise in mind so that we can get through a live Q&A, because at the end of the day, it's Wheelers and it's Ask Us Anything. So the chat is the most important component to, I feel, any channel that goes live, but specifically for our channel, because I made it a point to try to give the community the time that it deserves, because without them, I wouldn't be able to try to grow this channel. There would be no need, I would just do these for my own, just for me to chronicle the journey, if you will. So for me, it's as simple as focusing on the M's of the business. And the very first M that I look at is, does this company have any type of moat? What is the competitive advantage? Like, first of all, it has to be in a sector that I'm interested in. Forget about the company for a second, the sector, and then I'm going to do all the comparables. Like, it's like a piece of real estate for me. If I want to buy a house in a certain street, in a certain neighborhood, etc., well, I got to first see whether or not I want to be in that neighborhood. Why do I want to be in that neighborhood? What are the schools like, etc.? What's the crime rate? What's the appreciation? Those are all the things that we naturally look at whenever it's a house. So to me, a stock, because it's got to be 100 shares worth because of my strategy, I got to be kind of comfortable with that because it's going to be a big chunk going in. It's an oversized feeler bet. It's not just doing the 1 share rule just to put it on your radar. This is, you got to commit to 100. So if you're talking about $100 stock, I mean, my goodness, that's a $9,000-$10,000 investment right off the jump, right? So it's nothing to sneeze at. So I'm like, well, let me take a serious look at whether or not I even think they have a moat. Because if I land on the sector, like EVs, for instance, it was something that I was very, very interested in coming into this full time during COVID-19. So Tesla was the obvious choice there for me. And I remember that Facebook post like it was yesterday. I was like, I got some money from the 401k. I want to give me some ideas for a basket of stocks. My buddy Alan Chen chimed in. I go, I don't need help with this one. My can't miss stock is Tesla. Betting on Elon was my hashtag. It was just very, very crystal clear that that's where I thought the world was going. And the only thing that I could think of that was going to like for sure reap the benefits of that was Tesla. So it was like I wanted to be in the business. But then now when I start the research, it's like, why do I want to be in the business? Is there money to be made here, or do I just want to park money here to say that I'm a part of the Tesla mafia or the Tesla fanaticism, the cult, whatever it is? And then I'm like, well, let me look at the moat. Do they have a competitive advantage? And then I don't do anything else until I study the management, because the company in and of itself isn't going to do shit because people have to steer it to go a certain place. So I have to get very, very comfortable. I start from the top down. Who's the CEO? What are their credentials? What have they done in the past? Are they winners or are they not winners? Are they married? Are they happily married? Do they cheat on their wife? Like, I learned about that kind of stuff, about the background of the CEO that I essentially am giving money to and saying, here, be a steward of my money, and I hope you get me a return. I want to know what the hell is going on with these CEOs. As much dirt as I can dig on them, good or bad, it doesn't matter. So I essentially try to turn into a journalist like that. Like I'm stalking them on social media and all of that stuff. What kind of shit are they saying on Twitter? Are they talking Anthony Noto, talking too much about sports, not enough about Galileo? Like I want to learn about that kind of stuff about the CEO that I'm trusting with my money. I think it's fair of me to be able to do so. And then when I'm done with that and the box is starting to check out, I'm starting to feel a certain way about this company. What does the market say about the company? What kind of market cap are they getting right now? What's the sentiment? What's the total addressable market, etc.? And then I look at the entire sector, and then what kind of percentage of the pie would this company get realistically in a bull case, a bear case, and in a bear case, right? Like I look at those things as well. What kind of multiples is the market giving companies in this sector? Why are certain companies getting a higher multiple than others? Like why does the market favor a firm, an upstart, more than it seems to favor SoFi? Like I need to go on a mission and find out those answers because they don't really talk about that much on YouTube. There's something there that the market likes a lot more about Marathon Digital than it does about Riot Platforms, and it's been that way since I got into the Bitcoin mining. So those are the types of questions that I try to answer along the way, and then I look at these at the same time. I look at the money, and I look at the movie because it's a production, right? They're going to make a movie. So I gotta know, how long is this movie gonna be? What kind of actors? What kind of budget, etc.? Do they have enough money to actually make the movie? Or am I just gonna be sitting there? I got real excited. I bought a ticket to the movie. I got my popcorn. I got my nachos. I got my soda. All this shit that I'm not supposed to be eating. I got fucking M&Ms, and I'm excited to watch a movie. And there is no production because they don't have enough money. They don't have the budget to make the movie. So that's kind of the way that I look at it. And what kind of money do they have? How long do they have? Like a runway They call it run rate, but like a runway, it's like an airplane, and I look at it like a runway at the airport, and it only has a certain amount of time before it has to elevate, or you're going to either crash into that building in the distance, or you're going to go into the field, right? Because there's no more concrete there, there's no more asphalt there. At some point, you got to take off and fly. So I have to make a determination as to how much money does this company have to make the movie work. And all that being said, if I really sink my teeth into it, guys, it takes me about 6 months to a year and about 168 hours of my time until I started this channel and I found people like you. Now I can get it done in about 20 hours because those 20 hours are spent listening on 2 times speed the last 4 earnings reports. That is what I start with now. Because now I'm going to see whether or not the movie and the money makes sense. And they're going to have 4 times to convince me that they're on the right track, or are they constantly pivoting? Because the earnings tell you what they did, and then it's like the call. It's like the Fed. He did what, 50 bips? And then he has to talk about why he did the 50 bips, right? That's what an earnings report is with the company, is they tell you what they did for the last 3 quarters, and then they're going to have a talk about what they did, and then they're going to tell you what they're expected to do for the next 3, 6, 9 quarters. It's called guidance. And then now you're going to be able to listen to that earnings call and see if they delivered. How does that look? How do the numbers look in comparison to the story that they sold us? Because they told it and they sold it, and we bought it. We're still in for another earnings report, and we're going to be able to validate and verify that information and see if the movie's on track, if the production is on track. And I give them 4 chances to convince me that it's on track. So already I'm in it for 8 to 10 hours right there, if I'm really sinking my teeth into this fucking thing. That's why when people give me tickers, I'm like, bro, you got to come with something that makes it worth sinking my teeth into this thing. This is going to require time out of my life that I'm never going to get back. So as I progressed in my career, then now what I started doing is, why don't I sell an out of the money put that's like 20% below the current price? If the chart looks okay, because I'm going to have historical evidence there of how the market likes it. And why don't I get paid a little bit to do this research? So what I first do initially, guys, they gave me a ticker and I'm like, let's go sell some puts on it. And now we're going to go get paid to be librarian a little bit. And if this thing checks out, maybe this turns into an investment. If it doesn't, let me just see if I can manufacture the win as a trade. And then if it's kind of becomes like a go-to move, that's kind of what TSOL became. It was like that for like a year and a half before I really trusted it, because I didn't understand how it functioned. Still don't totally, but I trust it more, right?
Dude, I should get a commission for shilling that for so long.
Dude, you and Sam Bad, or whatever he was called at the time, Sam Solid.
Solid. Yeah.
Hidden Edge, him and Chris Patel. Shout out to those guys. Dude, they shoved that fucking thing down my throat, bro, and I didn't understand it. I was like, I don't want to. I mean, it was featured on the damn cash grab segment all the time, dude. It was like these M&Ms. At some point, I couldn't resist them. You know what I mean? So anyway, that's my process in a nutshell. And then I have some tools that I use, and I use stockanalysis.com. I use alphaspread.com, and I use visualstocks.com. I pay money for those services collectively, about 30 or 40 bucks a month. And those are essentially my go-to moves, and everything that you guys said, like the YouTubes, the CNBCs, all that stuff is at some point as part of the research. And after doing the earnings reports where I finish off is I go try to watch like 5 to 10 bullish videos on set. And then I try to go find 5 to 10 bearish videos on that stock. And then I take a little bit here and a little bit there to start formulating my own investment. Because let's just face it, you can't borrow conviction, but you can borrow some knowledge and then try to figure out whether or not it's forming a bull case for you or a bear case for you. But the only thing that is really going to solidify it in my mind is you're just going to have to go through the seasons with this stock. There's never going to be a replacement for the experience that you had with that stock. So that's the due diligence.
But you go through the seasons you can go through the seasons by selling puts.
Yes.
A lot of the companies that I eventually become something I invest in, I agree with what you're saying, but I kind of started off somewhat because I need money in the stock to actually pay attention to it. I need to see how it trades. I need to get a feeling for how it's going. And so that, I mean, even if you don't know how to do anything else, I think just getting started by selling way out of the money puts is a great way to start.
Agreed. So then this is the part that isn't spent. People don't spend enough time on this. You can spend too much time studying the company and not enough time formulating a strategy on how you can actually make money with said investment. I spend a lot more time figuring out how I can manufacture the win. If there's a win to be manufactured here for me, because I'm not in early on Tesla, if you will. You know, luckily I was in early on Palantir. I was in too early on SoFi. I was in early when it was IPOE. You know what I'm saying? Like I was in way early on Neo. Luckily I came out unscathed over there, dude. I sold it like 30, 40, 50 and a couple of shares at 60. And then just to see that shit come crashing down and went to 20, I go, oh my God, Lord, you parted the Red Sea for me. I'm going to walk right in just to know that he had just showed me. But this shit, the waves came crashing down, and I've been having to manufacture the win ever since. You know what I mean? I'm finally in the black on Neo again. But I just, you know, because then with my experience, guys, I learned that you got to spend just as much time learning how to manufacture the win with the investment, because picking the right company is one thing, picking the right stock is another thing. Learning how to actually make money with that ticker, off of that ticker, that is a skill set that people do not teach and preach enough.
Yep.
You go buy 2 shares of Tesla, it goes up 1,000%. Congratulations, it's only 2 shares. So you got to spend time treating each ticker like its own hamburger stand, like its own business, and figuring out how can I make this the most profitable hamburger stand in my portfolio, if you will. How can I make it the most profitable piece of virtual real estate in my portfolio? People spend a lot of time on YouTube bragging about the stocks that they own. I spend all my time showing them how I make money off the stocks that are owned in the portfolio. And there's a big nuance there that a lot of people haven't caught on to. There's a lot of people that know a whole lot more about SoFi and Palantir than I fucking care to ever know. I make money off of those companies way more than they'll ever fucking make, because I spend a lot of time learning how to manufacture the win. Because then at the end of the day, isn't that what we're here for? Or do you want to go on Jeopardy and answer every fucking question about Palantir's contracts? Is that going to make you money? Is that a game show that you're ever going to be a part of? I'm just saying. You got to be careful where you spend your time. It's your most valuable asset. I know I'm being funny, but dude, there's nothing funny about trying to make money. You got to spend time learning how to make money off of the stock. You're already in love with the company. You're already in love with the management. You decided that their mode is impenetrable, or however the words are, impregnable, whatever the hell it is. At the end of the day, do you know how to fucking make money off the ticker? Yes or no? Raise your hand if you know how to make money off the ticker. If you don't, you need to learn how to. Why the fuck aren't you raising your hand? Learn how to make money off the ticker. You're not going to get paid for watching the stocks, guys. I'm sorry. I don't want to be a dick. Somebody has to tell you the truth, and I'm the guy that'll do it for you because I don't give a fuck if you like me or not. I'm very secure in who I am. Anyway, Bill, take it away. What do you say? Because you know it's true, bro. And a lot of people
it's true. I just want to start off by saying that escalated really fast, and it was. I just love when you go on those soliloquies,
bro. You gotta teach and preach, bro. It is what it is.
TJ Cliche back at his best.
Yeah, it's amazing. It's amazing sometimes just watching you go at it. You started off by saying, I'm gonna be really quick with my reasoning.
Well, I don't know what happened.
You blacked out.
It's incredibly impressive how sometimes you can go on speaking. That's why if anyone's wondering why I don't have a YouTube channel, I can't talk to myself like that. It's not going to work out for me. But there's actually it escalated quick, but there's a lot of valuable information in there, and that you really need to learn patterns of a stock. You can study a stock to death. And I actually have the capability of doing that. I understand the numbers behind it. And even I have learned that that really doesn't matter at all. Like it matters to some degree. I mean, you have to know that you're getting into a good company. You have to know if you're getting in at a good time. There's certain things that matters, but at the end of the day, I didn't become, I didn't start making a lot of money in the market besides one holding, which was Apple. When I just had a big position, I held it for years. I didn't start making a lot of money until I understood how to actually manufacture the win. I wasn't calling it manufacturing the win, but when TJ started calling it, I knew exactly what he was saying. You have to understand how to make money from in various different ways, and from the shares that you own, and understand how that stock trades. That's almost, to me, more important than a lot of the due diligence and all these numbers. I mean, you can look at things at a high level, but listen, I'm just not going to be calculating personally the quarter over quarter growth of commercial customers of Palantir. I'm not going to do that. But you can see, general trends and understand how the stock trades. I mean, yeah, it's just been going up right now. But let's use SoFi as an example. I think that would be a better one. I mean, you can make a lot of money on a stock like SoFi, and understanding that it's not going to go much further below 7 unless something drastically bad happens. And you can make a crap load of money understanding that little basic concept.
That's true. Like Crossroads is saying, is that Roy? Is that Roy? Our Roy?
Yeah,
my Roy?
Roy.
I know, dude. Freaking Roy, dude. He's responsible for 5 of my pounds. Him and his wife Janine, dude. I'm putting him on blast here. They introduced us to fried zucchini, bro. I wish he had never done that, dude. Every time we go to the Grand Lux, which is owned by Cheesecake, by the way, that's one that I'm studying, dude. That's one that I dig in here, an hour there. Very intrigued by Cheesecake Factory. They own the Grand Lux cafes. Dude, this fried zucchini, bro. With soup, the way they say in Spanish, dude. It is bomb to the mouth, man. It is just, I did that one, and I got introduced to fried cauliflower recently. Dude, these are just things I never thought would be good, dude. Dude, we're going to have it one day, Bill, and I'm going to turn that frown upside down, dude. I'm telling you, dude. These people have figured out some weird shit at these restaurants, and they shove it down your throat. You're like, no. And it's like, whoa, dude, give me some more. You ordered another round for the table. But anyway, Dallas, how long did it take you to realize that not just learning about the company is essential, but you also have to figure out, okay, cool, how does it fit into my investment goals and objective so that I can manufacture them?
I really just wanted to mirror pretty much the Qs. I wanted to mesh the Qs and the S&P, but then pick my horses out of those top companies in order to try to get a little more alpha out of those. I think all of the studies that have been done so many times, it's so hard to outperform the S&P or the Qs over the past 10 years. So as a newbie, I didn't want to try to play my hand at that game. That's a losing proposition,
Right.
for 90% of people. And for me, I started with a good chunk of money from real estate. So I'm like, I can't screw this up. I'm new and I cannot blow all this money like you see most newbies do. And so that led me into my personal investment style. And I just wanted to sort of mirror the gains of the S&P, but beat it by maybe 5%, 7%. I'm not looking for 30-40% gains year over year. So that's what led me to that style. And luckily it doesn't need too much DD on Facebook. What are you going to tell me about Facebook? So that's what I do.
I hear you. Garcia, any thoughts on my little rant? Because, dude, I'm actually a real likable guy, but I just, sometimes I don't come.
I take it as passion. You're trying to get the point across so people stop, getting distracted or like just stop fucking around, and they actually, you know, take it to heart, you know, because I actually have an old video that I recorded. I remember you talking about it, where you were talking about choosing the stock as choosing like a long-term relationship. You got to stop fucking around, stop dating this, stop doing this.
Yeah.
I got to find it because it was the best. I recorded it and everything so I can like replay it to myself. Like, stop fucking around, stick with Palantir. You chose Palantir. Stop looking at all these other cryptocurrencies, all these other Bitcoin miners that are going up. Like, because it was hard, you know, the first couple of months and going all in on Palantir. There were a couple of weeks where, you know, where it wasn't doing anything, or it was even going down while the rest of the market was going up. And I'm thinking like, well, it's not that I don't believe in Palantir, but I want to make some money in the meantime so I can buy more Palantir. But then I had to constantly slap myself in the face and be like, dude, like, this is what you decided to do. Stick with it. Stick with it. And while you were saying that, that's when I started kind of typing up, like, because I kind of keep track of kind of like how Dallas was talking about, you know, you have to set certain like benchmarks for yourself. Since I'm all in on the Palantir stock, then I have to compare myself to the actual underlying stock. Like, if I'm all in on the stock and I'm selling puts, selling calls, and I'm losing money, like if I'm not outperforming the stock, then I need to just stop selling puts, selling calls, and just watch the stock do its thing and not do anything and save myself some time. So ever since I started tracking it, I think it was February 5th. It was the day before earnings when I sold the last bit of whatever company I had in the portfolio, and I decided to just plow it into Palantir. And I said, you know what, this is it. Like, this is the day I'm going to start, you know, actually taking it seriously. So I kind of go off of that date or performing with the stock. And since that day, like, it's up like 150%, with Palantir being up 120%. So that's 30% that I've been able to create a wedge, you know, from selling puts, selling calls, and buying shares with that money. So I've been a little opportunistic with selling the puts and selling the calls. So I'm not selling them all the time. I'm kind of just going, I guess in a way, going based off of TA, based off a little bit gut feeling, like, okay, I'm DCing my way into these calls, or I'm kind of DCing my way into these puts, and I'll roll them. I'll just keep rolling them until, you know, I kind of get out from under or above. So I think
Garcia,
yeah.
You don't sell calls on all your Palantir shares, right?
I stopped doing that a few months ago, because I made that mistake where I wanted to extract as much value, quote unquote, from my shares, where I wasn't sleeping well at night, because then I started rooting against the company, where I was like, I hope they don't win a contract this week because I have covered calls expiring this week. And I thought to myself, like, what? That's one of the stupidest mindsets to have for myself. You know, if I own the company, like, I want them to crush and win as many contracts as they possibly can. Like, middle of the night, oh, great announcement, you know, like, I was afraid of those announcements when I had covered calls on my entire position. Even if it was out of the money, I didn't want to be in a position where I had to start babysitting shares that had shot up 15, 20%, because I've done that with a couple.
That's definitely a good strategy for you, but I think let's have a call sometime, because you can fix your covered calls pretty fast, but I don't want to do it on here. But
okay, because right now I have the $34 covered calls. Like, they expire in a couple of weeks on October 11th. So the way I've been doing it is kind of inching up, you know, trying to go up $1 every time I roll. I made the mistake with cash secured puts where I had puts at 24 and it had gone down to 23 to 22. And instead of rolling down $1, I got a little greedy with the premium, and I said, you know what, maybe I could just kick it, you know, laterally a couple weeks up. And then I had to wait even longer to get out from under because I had kept it at the same strike. So I kind of started valuing the strike more than the premium itself. As long as I wasn't paying to roll, I value more trying to get up from over or get out from under, you know, quicker, you know, through rolling. But yeah, like, as far as introducing other strategies, I would want to, but only one contract at a time to kind of really get a feel of how these things work, you know, how different scenarios work out, because that is one thing I have been very almost allergic to, you know, trying to introduce a different strategy because I felt that it was working. But I think it is a good idea to have certain tools in the toolbox to get out from different situations in a safe way. You know, if I fully understand the gimmies, the gotchas, the edge cases. Because I always think about edge cases too, where I'm like, okay, what if the stock does this? If it shoots up 50%, if it goes down 50%, what happens to the position then? So those are the kind of scenarios that I kind of worry about. I think a little too much when it comes to.
Well, let's talk offline, because I think I might have a fix for you, like a really easy fix that doesn't require you learning a new strategy. But let's do that off. But was there a question on there, TJ?
So let's do live Q&A. I found like 5 questions here, so let's knock those out to make sure that we get these questions answered for the folks here. So it says, Bill, do you trade TSLL as an income vehicle if you're bullish Tesla? If not,
I have. I do occasionally. I just don't, because I'm just selling puts on Tesla itself, and if I'm going to end up with the shares, I'd just rather own the company than that fund. So, but it's a good option for sure, especially if for smaller accounts. I would say the premium is good. I don't really have anything against it, except for the fact that no matter how much I get the NAV erosion explained to me, it still doesn't quite make sense. I just know in general, it's a real thing. I have done some research on it, and the NAV erosion is probably a bigger impact than people think when the stock's going down. But it's completely insignificant when the stock's going up. So yeah, I'm not against it. I just don't do it because I'd rather do it on Tesla, and I'm not capital constrained.
Yeah, that's fair. So, and then we talked about this one a little bit, or no? What are your thoughts on Trinity as a business, as from your experience? Are they going up and to the right with the help of Palantir as their backbone?
No idea. I would imagine they'd go up and to the right over time, but I went with the spinoff. So I've been at my company now for about 3 years, and I was with the spinoff company from Trinity for about 4 years. So I'm pretty far removed from their strategic plans as of right now. I couldn't tell you. It is a good business. I can't really give you any opinions on it.
So Sean St. Martin is asking, how far do you normally buy covered calls? So on covered calls, you're actually selling. Whenever we sell to open, that's when we're selling options. And then when you buy to open, that's when you're either buying calls or puts. There's only 4 things you could do with options, right? Sell call, sell put, buy call, buy put. So we actually sell covered calls for that, just for the proper terminology. I'm 30 to 45 days out, and I like to manage 21 days. That's the Tasty Trade way. I saw that video probably 4 years ago, and it just clicked. And then I started doing some back testing when I founded the fund. Not me, but the nerds did the back testing. They get paid money for doing it. And we came up with this thing that, hey, statistically and historically, and this was like, dude, like you're talking about like 100,000 positions that get put into this freaking algorithm on a computer. And statistically, dude, it's just so much easier to go grab that first 50%, 60% than it is the rest of it, because you get closer to expiration. There's so many forces that are working against you. And so it just made sense. Well, you go sell something 30 to 45 days out, lock in the 50%, you're not sweating, move on to the other one. It's just a very easy way, or an easier way, to make consistent income without dealing with all of the stresses of expiration. So that's my way of doing it. Bill, do you have a preference? Are you a weekly? Are you a monthly? Are you a combination of everything? Where are you at?
I'm actually I'm either sometimes really good at covered calls until I'm not. It's one of those things where I like to do it, exactly the way you're saying, but then I always somehow end up getting stuck, and I try not to boot it out to eternity. But luckily, if I don't care about losing the shares, I tend to be very patient in rolling my covered calls. But with something with there's certain tickers that I just don't want to lose them, so I have kicked them out to who knows, 6 months down the road or whatever like that. So it's really just kind of all over the map. But I just don't use covered call. I'm not trying to maximize my covered calls. I try until I'm not able to, and then I'm okay with just getting minimal amount of premiums from my covered calls. Where I really maximize, I would say, is on the put side. It's just easier for me. For me, the covered call side is just it's something additional. It's I maximized until I can't, and then I just go from there.
What about you, Dallas? Are you a combination of everything, or do you usually stick to like a set schedule?
I like as close to 30 days as I can get, just because it allows me to look at the options chain and within like a couple of seconds figure out what this trade, what the math, what would this be on an annual, and then obviously just times 12, or excuse me, what this would be on a monthly basis, and then times 12, what would I be making on this for 12 months. So I like to get as close to 30 days as possible.
And do you have like a profit percentage that you're looking for, if it's a cash secured put or like even in a covered call? Because I feel like my strategies are very different on the way that I manage cash secured puts versus covered calls. Because I have several covered calls that are so out of the money at times that I just don't even bother with them. I let them expire worthless. And then I start again, by studying the movie. I do that with Enphase. Like I'm on my third round of covered calls against this PMCC campaign that I'm running. I bought the long call, and then I've been selling calls against this. This is the third round, and I don't want to have to study early, so I wait until it expires on a Friday, and then I use the entire weekend to get an idea that if it runs up to these levels, I'm going to sell at these levels. And I still get it wrong. I'm like totally wrong right now. I sold Enphase like a month out at 130, and I felt real good when I did it, and I think I'm down like 100% already. So it just shows you how the homework didn't work for me. But that's I manage cover calls and cash course differently. Do you do the same thing, or are you just mechanical on both sides?
The past like 6 months, I've been much more patient with the cover calls. Like I still don't have any calls on Riot, so I'm like picking my spots more. So it also depends. Like I've been taking into consideration, like, when am I looking to get out of this? Because if I'm if I'm looking to get out of Riot in the next 12 months, like let's say you sold a call yesterday on Riot. Riot's up like 6% in their after hours. You're a couple, like you're not going to catch up with the stock already if you're looking to get out of it in like the next 6 to 12 months. Like you're already going to have to roll that a month to catch back up to it, and then it's probably going to keep going, so you got to roll out another month. So if I feel like I really feel passionate about where I think I know this stock's going, which for pretty much I never do that, except for like crypto has like these cycles thing, so it gives you a little bit more confidence. But if I'm like, okay, this is just a trade, I'm looking to get out of it at whatever time frame, I'll manage the calls a little bit differently. Also, it depends where the stock is in its chart. So if it's near kind of like a point of resistance, like I sold calls on Amazon at like 190, well, that's pretty much its all-time, it's high, it's recent high. So they've come down and I'm already in the profit, but I'll hold on to those much longer because it's at like its all-time high. It's most likely to continue to pull back a little bit. Whereas if it's just a stock that's kind of ranging, not near any major lines of support or resistance, and I get a quick pop in my favor, then I'll take the trade off then, but if I feel like I was really patient, waited for this stock to come down to this price and I got that price and I sold a put, like for Intel, for example, that's a good example. Intel, I feel like I nailed the entry. I had $18 puts, and in only a couple days, those went up to like 30%, which normally I'm gonna take that off. But I'm like, this is probably the near term floor for Intel, so let me give it more room to run. And then next thing you know, with that news, I actually closed it out like the day of that news. So I closed it a little bit too early because I closed it at like 75%. And then like right after hours that news came out. So if I would have waited, could have got probably 90%. But I'll let those go longer if I feel like I really nailed my entry point.
I gotcha. Real quickly, Garcia, before we get to you, Bill, what's your X? Somebody's asking me what your X handle is on my Twitter.
Oh, dude, I don't know.
Bronco something, right? Bronco.
Yeah, I have no idea. I'll start putting it in my thing.
Okay. No worries. Remember Garcia? Remember that classic clip we had when you showed me how to change my TJ the Wheel deal? And
You deleted your account?
Dude, I was super stoked, bro, that I got TJ the Wheel deal.
Hell yeah. Well, yeah, because nobody could find you. There was this like something account 76543. It looked like
yes, dude. I was like, what? How did that even happen? And then I had like 2 Twitters there for a while. I don't even know how. It wasn't like a big burner account. It's just that I don't know what I'm doing. Like I'm like, if something happened to me, like what happened with Shannon Sharp, that would be an accident, guys. Some of y'all have no idea what I'm talking about. Dallas knows. Anyway, Garcia, what's your situation with covered calls? I know that you only do it on 20% of your PLTR shares, but are you 30 to 45 days out? Or are you weekly? Like, where are you at?
I kind of do 14 days, two weeks out. I usually sell 2 weeks out, and I manage at 1 week, or between that. On expiration week is when I usually manage it. Is where I'll close them at. I kind of do where since it's such a short term period, it's like 30% profit if it's in 1 day. I close it in 1 day, and then the next day it's 40%. The next day after that is 50%. Is where I would start closing the covered calls if I get that amount of profit within those couple of days.
Right.
So kind of where I'm at, and I'm doing weeklies just because I have such few companies that I'm selling on. I'm not worried about juggling, 4 different, and I'm actually not even selling calls or puts on any of the other stocks besides Palantir. Just because I'm barely, going into these stocks, kind of like how, Dallas was saying, is since I'm just getting in here, I'm not even thinking about selling, TSO, Innovix, Rocket Lab at this time because I'm just building my position. So that's where I'm kind of at, where I'm selling more puts on these stocks. And yeah, I kick the can down the road on both sides. If I don't usually wait to get assigned on puts, I don't really wheel, I guess, in the sense I sell the options. And if it gets to a price point where it's too good to, to not buy, I'll buy the shares, and then I'll keep kicking the can down the road with the puts. I just, unless it gets to a point where it's like my dream, let's say TSLL at $5 or Rocket Lab at $3, then yeah, I might let those shares get assigned and then kind of deposit more money into the account. But I usually just roll both the puts and the calls.
Gotcha. And guys, I put both Dallas and Garcia on there. If y'all could please show y'all support. We're trying to get Dallas to 500 subs so that I can get the formal invite on his channel. Garcia, still waiting on one for yours, bro. Like I want to go on these channels and go talk my shit, man.
Yeah, like I think I'm at 932 right now. I think that's where I'm at. Yeah, like, and I think the recent video that's doing well was I made an edit for Sham Sankar. He was testifying in front of the government, and that dude was spitting fire, man. Like every time it came to him, like he had something to say, like he was on point. Like if it was a competition between him and the other companies, like he crushed. Like he had something to say about everything, and they loved it. They loved what he had to say. So. That video seems to be doing well. Like people are watching it. Like it has like 3,000 views right now.
Well, you had one that went over 1 million though, right?
Yeah, it was like that one joke video though. It was like
it was about the rappers that were angry at each other or something like that.
Yeah, it was like a 30-second video that went viral. I mean, I kind of and some of the subscribers are came from that video. And I know ETF, he had a funny joke where he was like, some of those subscribers are like, I subscribed for hip hop reactions, and all this guy's talking about is this AI company.
That is too fun. Dallas, can you handle this one right here? because you're more familiar with this space than all of us, I feel. Well, what thoughts on crypto as we haven't seen halving price action yet?
Yeah, so if you look at the amount of days, like there's like crypto specific channels that have this down like to the day, but if you count the amount of days from each halving where um, the price actually reaches a bottom, like we're literally like almost to the day right where we should be. I know I've heard Bill mention it, like, you know, after the halving it's supposed to be like, but basically,
No, I didn't say that. I just listened to everyone who was buying calls and like buying, like they were all saying it. I don't know.
yeah.
I don't know anything about Bitcoin, but
But
everyone
I
saying
think,
that after the halving it was going to go up, and I'm still waiting
yeah.
for that to happen.
I think this cycle got front run a little bit as far as now we got the ETFs. I think that pushed the price up just a little bit prematurely, but based on how many days since the halving that typically takes to start to actually find the local bottom, we're like very much on track. I think in the next, like we're literally down to weeks at this point. September, obviously, you can bring up if you just Google like Bitcoin's price.
Are you saying the rainbow chart looks like that right now? Or what?
No. If you Google Bitcoin's like monthly price action, it brings down like January, February, all the way to December, and then shows the averages of Bitcoin's performance each month. September, just like stocks, is never good. But October and November are normally the best months. So everything I'm seeing is still very bullish. Fourth quarter is normally when you see the next move up. Everything is on track in my personal opinion. People are just getting frustrated. So
when was the halving in April, right?
There's price capitulation and then there's time capitulation. And I think a lot of people who just came into the market are like worn out a little bit by the time capitulation because we haven't really done anything. And,
yeah, but here was the halving was right around here, no?
Well, the other thing too was the whole ETF. Like, so I just feel like I've been waiting for this thing to go up for a long time, and if they said when the ETF gets approved, it was going to go up, and then there was a halving and it was going to go up, and then I don't know. Like, I think that's where I'm getting a little lost in this whole thing. Is when is it supposed to go up?
It's supposed to go up Q4 of the Bitcoin halving year. So we will have to revisit everything if Bitcoin's not making like substantial new highs by the end of this year. Everything, all the cycle theories will be completely blown up. Because if you pull up a chart of all 4 of the last cycles, like right, we are exactly where all of the other cycles have happened. It's all been Q4 of the final year of that cycle. Actually, this wouldn't be the final year. We're heading into the final year. But Q4 after that halving is normally when you see that substantial move up. So if that doesn't happen in the next month or two, they call it October for a reason in crypto as well. October is normally substantially green for Bitcoin. So if that doesn't happen, then we have to really reevaluate everything at that point.
I mean, and something that I'm seeing, I have friends who are really into technical analysis. Like I'm really not, but I'm kind of absorbing a little bit of what they talk about. And it kind of looks like a bull flag, like on the Bitcoin chart. Like people who are super into technical analysis, like they would say, oh man, this is like a major bull flag, like forming. But like, Dallas is saying is people are getting frustrated. They want their returns today because they're borrowing money or they want to get rich quick and they don't want to let this.
A lot of people bought when they heard of the ETFs, so they're more frustrated. When you bought at 20 and 30,000, you're not frustrated. You're up 200-300% right now. Yeah. So it's the people that recently bought that are frustrated because they're like, Palantir is going up, Nvidia is going up, everything's going up, and Bitcoin is supposed to. Crypto has been the best performing asset over the past decade. They're like, we just got an ETF, which is like what all you crypto nerds have been waiting for. Democratizing crypto so everybody can buy it pretty much. And price fell. I mean, look at Ethereum's performance since the Ethereum ETF. It's like awful. So I recently sold all my Ethereum. I still have the leveraged ETF, but it's really been. I think still Ethereum will outperform percentage wise over the next year, but it's been really disappointing to um, what's been going on with Ethereum. But yeah, it is if you zoom out, it's a gigantic bull flag. So everything is where it should be right now. Now, I know TJ believes the same because he wouldn't have so much riot if he didn't.
Yeah, man. I mean, I'm a little nervous because I don't fully understand it. Like the wife and I were actually watching a 20-minute video on YouTube, and it was like, "What is Bitcoin?" Just to just to see again. It's like the movie and the money, right? Like, I mean, to me, it's always going to come down to that. And I'm like, are people still saying the same thing today as they did when this video that I'm watching is like this guy's talking about it? We've only gone halfway through the video because we got home, right? We're listening to it in the car, and it was just like peer-to-peer finance. You don't have to trust a third party, decentralized. These were all the things that were very bullish for Bitcoin, right? Like why would people want to do this? And then you have like all these nodes and these little satoshis and all of this shit, right? Like this guy's giving you like a whole framework of it. Well, maybe we'll watch it on the channel one day. It's like a 20-minute video. We watch it on 2 times speed. The guy doesn't talk that fast. And after getting through about half of that video, everything still checks out. There's still I haven't heard anything about there ever being more than 21 million Bitcoin. I haven't heard anything about the encryption not being good, etc. Like the ledger's legit, like the Bitcoin blockchain ledger or whatever you want to call it. Like everything's all legit. It's never been hacked to my knowledge. There's companies that have gotten hacked and millions of dollars or Bitcoin, however you want to look at it, has been moved from place to place. That's happened. People have lost their keys. That has happened, right? Like those things have happened, but could it get money? Could it get money? Because let's just call it money, virtual money. Could it get money from point A to point B without having to be in the exact same room at the exact same time without needing an intermediary? Bitcoin is the only asset class that can do that in the entire world. Just let that sink in.
Bitcoin or crypto in general?
Well, I mean, this video is about Bitcoin, so I'm saying Bitcoin. Bitcoin started it all, right? So I feel like it's the only thing that you can do that's legitimately peer-to-peer, and you don't need an overseer, right? You don't need a third party like Cash App. There's 3 or 4 third party. There's 3 to 4 third parties because you got your financial institution. The other party has their financial institution. Then now they got to dance with Cash App and Square or whoever the hell owns. And then PayPal, same shit. There's 2 or 3 hands in the jar, if you will, in order for that transaction to facilitate. Whereas with Bitcoin, I could be at the other end of the world. Dallas could be at the other end of the world. And somehow we can connect with this encryption, this wallet address, however that works. And I could get that buying power, and it could be verified that he has it in his crypto account, and I would have it now in my crypto account. And it's allegedly very simple, not necessarily for people like me because I don't geek out like that. So as long as that stays in place, the rest of it is it's probably just whatever somebody's willing to pay for it, right? It's the exotic cars, the fancy artwork. It's probably a lot of the greater fools theory. But I do love one thing about Bitcoin and why I became bullish on it from the very beginning. And this has always been my bull case since I got introduced to Bitcoin in like 2014. First heard about it in like 2010, blew it off. But when I put money into trying to do something with it, was in 2014, day traded it. successfully for about 50 grand profit in 2015 before I went back to the oil field. Is that there was never going to be more than 21 million. Like it was a zero-sum game, and for whatever reasons, it just made sense to me because they print money on a daily basis, right? On an hourly basis, they're printing the currency that we're all chasing. And I was like, I don't know why, it just made sense. And that's the thing, I don't even know why it made sense. It just made sense. Like I caught the vision. It was like Magic Eyes, right? If you ever know what the Magic Eyes artwork is, I know I'm showing my age right now. But there was like these art, these, I don't know, these 12 by 24 or whatever, and they would hang on a wall, and then you have to like look through it like you're looking through a window, and you can see the dragon in the background and all this crazy shit. And some people were able to like see through it like they're looking through a window and see everything in the background, and some people were not. I was one of those people that if you told me where to look, and I'd like try to like look through the Magic Eyes, and then you can see everything really, really cool in the background. It was like this 3D, 4D shit. I don't know. Google it. Some people could see them and some people couldn't. And I think that that's what Bitcoin is. It's Magic Eyes. Some people either catch the vision or some people don't. But the one thing that I feel like is real and it's tried and true is that you can verify the blockchain, like the ledger, like everything is verified. It's like an open checkbook that people have access to, and they can verify that the transaction did indeed occur. And the fact that there's never going to be there's not going to be any more 21 million. Because when I got bearish, I was bearish for a little while on Bitcoin, and it's the first time that I heard that there was going to be a fork. I don't know if y'all remember that whole deal. Like this was like in 2014, 2015, there was going to be this big old fork in the road. And I'm like, okay, I'm barely starting to understand what this may or may not be. And now you're talking about a fucking fork on the road. And I'm like, I feel like I'm in a Robert Frost novel poem, you know.
I think it did fork though.
The road less traveled. Yes, I'm saying, but I lived through that scared. I didn't know what that meant. And then I got introduced to like Bitcoin Cash, and there was and then all of a sudden all of these shit coins took off. Doge, people made a shitload of money with Doge, and then it took on a mind of its own. Then I got introduced to a bunch of scams with like USI Tech, Bitcoin. There's something, one was called Bit something, and it looked a lot like the color scheme for Bitcoin, where it's like you could buy these packages and introduce people, and they could buy packages. They turned it into multi-level marketing, dude, for Bitcoin. So I got kind of sour on the whole Bitcoin thing because it felt like the Wild West again. And but now I'm bullish on it because and more so the miners, only because nothing can happen without the mining of the Bitcoin. And I was just like, well, and I could wrap my mind around. So we were talking about earlier, Bill. I could wrap my mind around what it takes Riot, Marathon, Core Scientific, Clean Spark, whomever. And if it takes them $10,000, $15,000, $20,000 to mine one Bitcoin, and it is trading on an open exchange for currently 61, 62,000, I can see how there's an opportunity there for them to make money. If it legitimately costs them 20, 25,000, 30,000, whatever it is, to be rewarded that Bitcoin, because whenever you're mining Bitcoin, you're essentially just solving these mathematical expressions, and your reward is little Satoshis or whatever, and that turns into Bitcoin, like your rewarded Bitcoin. So they're essentially able to get a hold of this asset class for quote unquote pennies on the dollar. And then they can sell that asset class on the open market at the going rate. So that's why Bitcoin miners made more sense to me than just buying Bitcoin outright, even though obviously Bitcoin itself has crushed it if you just look at the ticker. So
I think it is a bit deceiving though with some of these miners, that because I understand what you're saying. They have they're just looking at a gross profit level, their revenue minus their cost of sales. So they're saying it costs like $20,000 to mine a Bitcoin, and then they get value at 60, right? So yeah, the spread is worth the difference is like in theory profit, but they have all of these other expenses.
There's a lot of layers on that onion, dude, and when I peel them back, it makes me cry.
Yeah, when they say $20,000, it's almost irrelevant. It's like include your SG&A in that, or your SG&A in that equation, and what does it really cost you? Because their profit from operations is negative. It's always negative. So
Right.
the only way that they could really make money is if the price of Bitcoin goes up, which, I mean, if it does, they can make a lot of money. If it doesn't, I mean, they're going to have to dilute even more and more and more.
Agreed. Thoughts on that? Garcia? I don't know if you're like bullish at all on Bitcoin. You're bullish, bearish. It's all bullshit. Like, where are you at with it?
I keep it. I don't put too much thought into it, but my main bull case on Bitcoin is that it hasn't been hacked. So if it hasn't been hacked and it won't get hacked, I mean, it's hard to poke holes in that. It's like, where would the rich and wealthy want to keep their money? It's where you can't access it, you can't hack it, you can't steal it if they're smart with how they store it. And for me, the biggest hole in Ethereum is that it's all ran by a nerd. It's all ran by a guy. Like, this guy can decide to mess it all up if he wants to. So there's a one man, kind of like a one man. I forget the term, but there's a lot of risk. One man risk with Ethereum.
Key man risk.
Yeah, there's major key man risk with Ethereum where there's no man risk with Bitcoin. So that's kind of, it's more like
well, hold on. I don't subscribe to Jesse Dow, and I'm convinced it's Hal Finney. Shut the fuck up with that. You don't know. We can argue about all that bullshit later. So I'm not in that camp that Satoshi Nakamoto is dead. I don't know that. I feel like it could be the same fucking nerd from Ethereum. What's his name? He's nerdy enough to do Ethereum. He could be Satoshi for all I know. So what I'm saying is there's a huge unknown here, and I don't subscribe to it. I think Jesse Dow is a brilliant man. But don't come on the stream and acting like, first of all, you're the only transparent on your portfolio. That's bullshit too. I'll call you out on that. And I got a shitload of money too. So that's bullshit. Stop that noise, or I'm gonna become a member on your channel and I'm gonna put it on your chat. Don't do it anymore. Y'all can tell them I said. That's that. I'm just saying, because I'll call bullshit quick, because nobody's as transparent to me. It's not even close. I mean, come on.
Tell him, I don't like that guy either.
I'm gonna say, there's nobody as transparent to me. Go fucking find him. Let's come on the channel and let's show who's who.
But I thought Garcia was going to debate him on PayPal.
We don't know who Satoshi Nakamoto is, so that is a key man risk in and of itself.
Yeah.
I'm just saying, dude, if that is not a bear case for Bitcoin, what is?
I heard the U.S. government or like CIA is kind of like.
It keeps me up at night, bro. I'm just saying, it keeps me up at night wondering, is it Elon Musk? I don't know why I went a year of my life thinking that it was Elon Musk. I have no idea what kind of joint I smoked in a previous life, because I would never do that in this one. But somehow I got it in my head that it's got to be Elon. He's alien enough to do this kind of thing.
I think it's the government, personally. I have no proof of that whatsoever. But I mean, there's no way that the government doesn't know who it is.
I mean, there's a kind of like a lecture years ago. I'll see if I can find the video and link it to you guys. But there was this guy, he was from the military. Like, he was involved. I think somehow he had maybe whispers, or he kind of heard certain things about it, but he was giving a lecture on why Bitcoin was going to be such a big deal. And he was talking about this years and years and years ago, talking about how the energy consumption and how you're creating this like digital porcupine that can't be accessed. The bigger it gets, the stronger it gets. And now every government on the planet is going to have to own Bitcoin to have their own fortress. And it's just, it just seems like it would be some type of ploy, from the government. I just don't think one guy, even like Elon, I feel like if it was him, I feel like he would have tapped into that money already by now, just because I think he would have tapped into that.
Twitter, bro. He was going to buy Twitter.
That's why Dan Kenya thinks it's Putin.
Dude, again, I don't know. I mean, dude, first of all, Jesse knows a lot more about this shit than I care to. So keep that in mind. But how much Bitcoin does this Satoshi Nakamoto pseudonym, is that what it's called? Is that am I using the right word? We're making up wrong words. Who gives a shit? I mean more than English.
No, that's right.
That's a movie. That's a line from the movie Boy in the Room. How much Bitcoin does he hold that would Allegedly, again, this is all allegedly. We don't know. I hate when people act like they know. It's like, dude, I'm a Christian, but I hate when you act like you got a special version of the Bible. You don't know when he's coming back. Shut up. You don't know. We're just all our best guess here. So I don't act like you got the special King James version, the autographed edition. You don't know either. Shut up. How much Bitcoin does that person, thing, or idea? Because I don't know their pronoun, right? We don't know who it is. How much do they own? How much Bitcoin do they own? There's 21 million of them. How much belong to Satoshi Nakamoto?
I'm Googling it and it says 1 million, but that's what Google's saying.
And I saw this guy's name on here. This is the nerd that did Ethereum, right? Like a super nerd. I seen him talk.
Yeah, that's the guy. Yeah.
This dude's nerdy enough to know how to do this algorithm, bro. I seen him talk, dude. I don't know that he's like very Alex Carpy, dude. Like, I mean, dude, they run at a different level, dude. I mean, I'm not even convinced they breathe oxygen sometimes.
TJ, there's already cryptos out there, if I'm not mistaken, that have even improved upon Bitcoin, right? So I think the only negative, because I'm with you. I mean, listen, I'm against government spending. I hate the whole, inflation, the devaluation of money. But in the concept that, there can only be 21 million Bitcoin, no one has ever been able to explain to me that why that's important when there's an infinite number of cryptocurrencies that can be created and it can improve upon the Bitcoin. Their kind of blockchain or whatever they have going on, it can be improved upon. So what would make Bitcoin so special? And I've never got a good answer to that. You give me a good answer to that one, and maybe I'll invest more into it. I don't know, but I mean, it's
like, I'm just assuming it's like first mover
cryptos that you can create.
Yeah, I think it's just because maybe it was the first big one, and I think maybe people have too much trust. That's the only thing I can think of as to why people wouldn't just switch to a different one.
Well, also, I mean, that is the answer to the question in itself, is like, you can't make any more Bitcoin. So the improvements that have been made to Bitcoin and new coins, you can just keep making more. But there are no more Bitcoins. So that's part of
essentially
you can make a new coin that a max amount.
So essentially, Bitcoin, just to draw an analogy to the channel, is a Bitcoin tracker. It is a wheel tracker that was created by Troy Hutch. And then Bill was able to add to it so people can make Bitcoin better, right? Like somehow they're able to tweak the software, or no?
They can make it more efficient, like energy efficient. They can make it faster. There's a lot of things that they can do and not sacrifice the decentralization of it. There are other cryptocurrencies that are decentralized out there.
I think like my generation,
there's a link. If there's a crypto node out there.
Yeah, I'm not an expert. I would love for someone to explain this one to me.
Yeah, dude, I don't know, bro. And I've been in this shit since 2014, yo. And that's what's, again, scares me. That dude is as ambiguous as Palantir is. Man, it ain't gonna take you 10 years to figure out. They do some pretty real cool shit. They help essentially companies and countries run more efficiently by using very comprehensive and extensive data analytics via software that is tailored. It's like a tailor-made suit for them. It's not a one-size-fits-all. They're like, hey, we have this is a foundation. We're going to tweak it for you, etc. Like, I think you could study, be in Palantir for like a year and essentially like create that, and then just accept and realize that the people that created it are a lot smarter than you, and just thank God that they exist and make a lot of money with the company and the stock. But with Bitcoin, it's 10 years, bro. And you can go talk to, I've been in, I'm talking about for 10 years. It's been around for what, 15? I think it just had its anniversary. It was founded in like 2008, 2009, something like that, give or take. Mm-hmm. You can talk to 10 people, and this is, again, something that scares me a little bit about Bitcoin, is you can talk to 10 people that have been in it from day one, and you get 10 different answers on what it is and what it does and why it was even founded or created and stuff. And that's the part.
The reason has changed over time too.
I'm saying it It's
Heidi,
tough, bro.
Heidi seems to know a lot about it. I mean, I don't have enough time tonight, but I'd like for him to come on next week. I talk all things crypto, and
Click the link, honey.
I can't stay on too much longer tonight. But I mean,
Yeah.
I think we can dedicate a whole episode to this shit.
Yeah. But
It's
my
very
biggest
interesting. So this is why I'm in. This is why I'm in. Well, Bitcoin, I don't have a lot of it, but this is why I'm in the miners so heavy. It's because I think this shit is going up and to the right, and I don't know why, but I'm gonna go on the ride. All I'm saying is I bought the ticket from New York to Los Angeles. Yo, I don't really know how the plane flies. I have faith that it's going to stay in the air for about 5 or 6 hours because that's what I need to make the 3,000-mile trek. To me, it's I'm putting the faith that I put in the pilot. I put in Boeing. Oh, Lord, it's hard to do sometimes here lately. But I put in Boeing and I get my ass on the plane. I strap up and I'm like, I'm going to save myself before my wife. She said to do it. You know what I'm saying? And I'm gonna hope that we land safely, and any plane that lands safely is a good flight. I never complain about a flight. If it lands safely, it's a hell of a flight. Saved me a lot of time, and it was a reasonable amount of money. It's way more efficient than traveling by car or train, right? Or bus. So that's what Bitcoin is to me. Is I bought my ticket, I punched my ticket. I didn't go first class, but we in there, baby. We're flying with the luggage. You know what I'm saying? Like we good. We don't need to understand what's going on, and I'm trusting the pilot. Here's the kicker. I don't know the plane's flying alone, or there even is a pilot. So that's what Bitcoin is to me, bro. And I'm on it, and we either gonna make it to the destination, or we fucking crashing and burning, and we all dying in this mofo together. I'm hopefully in the back. I got that extra little second to pray a little longer, a little harder. But that's just me being honest and not really knowing what the hell it is. I'm only in it because I think it can make money. Why else should you be in it? Are you like trying to start a Bitcoin revolution against the USD? I don't think you're going to win that fight.
Yeah, you're never gonna win that battle.
Like, why else would you be in it? Why else should you be in it, Dallas? I mean, seriously.
I think this is not my particular like reason for owning crypto assets, but I know like the millennials, like I'm in my 20s, a lot of my friends, if they want to, I don't see it as like this big hedge against inflation and all that stuff, or else it would have done great recently. But to me, it's digital gold. You know, none of me and my friends want to go buy gold and have gold in our portfolios, but digital gold, Bitcoin.
Yeah, but
that
Dallas,
you can sell me.
think
But
about
look,
it. Cryptocurrency, like the blockchain actually solves a lot of the problems that we had with gold. I mean, you could, if you have a place where gold is stored, you know, and you can transfer the value that, like, you have some sort of ownership of it, and you can transfer the value to anybody worldwide just by, you know, by using the blockchain. At least at that point. So, like, I guess what I'm talking about is more of a stable coin. I think I can really see a world where stable coins, whether backed by something, whether it's US dollar or gold or whatever, really is the future. But maybe that, I mean, you know, I just don't see the future being full blown Bitcoin. I mean, I think it's a great trading asset, but
yeah, I don't know if Bitcoin will survive forever. I know I'm going to reevaluate the case every bear market, which will probably be 2026. Me and Bitcoin are dating. I already have the date chosen that we're going to break up. Fourth quarter of 2025. We're
She
breaking
know
up.
it. So
She doesn't know
it.
Hopefully, Trump is going to look. I think if Trump wins, like, it's going to be a really good thing for crypto and Bitcoin.
He's
Obviously,
got to stay alive to win, Dallas. I mean, this is a crazy world we're living in right now.
you know what scares me the most about Bitcoin is every single person that I hear talk about it that's bullish on Bitcoin all had an exit price.
yeah.
That just worries.
Certainly, last cycle, everyone thought 100K.
Yeah, 100K. Like, oh, once it hits 100K, I'm out.
But this cycle, like this cycle, if it doesn't hit 100K this cycle, something's fundamentally wrong with the 4-year everything. Yeah. So, we'll see.
It says your shirt gave away that you're for Trump. Why? Because Trump says he's a Christian? A Christian? I just said Christian. I'm thinking about my wife.
If you can remove politics, I think most of us would rather have more money in our accounts. So if that's your main thing for voting, then you probably want to vote for Trump as far as
No, I saw a reel where they're asking him, "What's your favorite Bible verse?" And he was like, "I don't want to get into specifics or whatever." And
Yeah.
I thought it was funny, dude. I mean,
I thought that was hilarious.
That was just like, bro, just rock with John 3:16 if you can't think of anything.
There's so many bumper sticker Bible verses, John 3:16, Philippians 4:13. Like, he could have said anything. They weren't going to ask him to recite it. You could tell they were trying to bait him because they probably knew he didn't know.
Dude, this is fair. This is fair too. Like, to me, Bitcoin's like the crypto Tesla. You know what I'm saying? Like Elon Musk can say anything, he can tweet anything. I ain't selling Tesla, bro. Like, I think that little mini ETF is going up and to the right over time. The thing with Bitcoin that does scare me, though, let's talk about this a little bit. There's so many people. You know, I've had conversations with Carlos. I was on Finance Junkies, Vitali, dude. They talk with so much passion about it. It's very convincing. But it's almost like, you know, past results aren't indicative of future results or whatever. And I feel like, could we get suckered into this with Bitcoin? Like, in other words, what happens if an entire halving cycle occurs and we don't get that price action that we need? Like, how do the miners stay in business? This is things that Bill and I talk about my beloved Riot, etc. I feel like Riot has enough on the balance sheet, just barely, to handle that extended crypto winter. And are people going to be able to hang on for 8 years of nothing? Because it seems like you hang on for about 1.5 years of nothing with crypto, and then boom, things happen, and then it kind of like sideways down, whatever, levels off, and then we're waiting on it again. You know, so every 3 or 4 years, something magical happens for about 1 year, 1.5 years. And then the crypto winter, the bear market. I think crypto winter is the terminology that they use with the crypto.
And can we
What
stop?
happens if we don't get that run up? Does that poke a bunch of holes in the bullish strategy and thesis?
It doesn't poke a hole in Bitcoin, but it pokes a hole in the validity of the 4-year cycles, because they've been very predictable. Based off, now we have like a pattern.
But there's only been 3 or 4.
That's all the data that we have, you know.
I know, but that's what I'm saying. But people talk about it like, dude, this is when it's gonna rain. You know, it's like that's my big issue with technical analysis. Is I hate when people post charts and then people start treating them like the Gospels of Matthew, Mark, Luke, and John. Like, this is an absolute certainty. This is exactly when it rained last time, and this is when it's gonna rain this time. Don't leave home without your umbrella. Like, I mean, dude,
I really hope that Bitcoin goes up. I don't know enough about it. I'm fully admitting this right now, but that rainbow chart is one of the dumbest things I've ever seen. That makes no sense. I mean, God damn it! It's like you're just looking at this like previous, price action, and it's not even like a price chart. Like, the price doesn't have anything to do with it's just buy and sell zones, and it gives you a hypothetical. I mean, it makes no sense whatsoever, and its history is so limited. Like, but yeah, I mean, I hear what you're saying, that like, yeah, it's happened 3 times, and so, potentially,
because it lines up with the M2 money supply. So when money is getting pumped into the system, people are going to want to put that into risk assets. And so what's the best risk asset? I'm not saying it's Bitcoin. I'm saying it's crypto, because it'll flow from Bitcoin down to the altcoins. And that's where you can make life-changing money with a little bit of money. And can we stop asking what people's opinion are who are a breath away from 100 years old? Like, of course, they're not going to like Bitcoin. Of course, they can barely even understand Bitcoin. I don't know why that.
I hope where Charlie Munger is, the last thing he needs to be worried about is Bitcoin.
Well, Charlie Munger is not worried about anything right now, but I think
he is if he didn't make the right decision in life. But he's gonna be worried for a real long time. I'm pretty sure he had it figured out. He knew investing that well. I think he had to play the odds on that one,
Yeah.
But my goodness, dude. I mean, I'm just saying, dude, everything comes with risk, right? But I have punched my ticket. We're not flying first class. We're barely in coach. It's the real tough seat. I expect turbulence on this flight, but I do hope that I can, land safely on this one, because I have made an oversized bet on something that I'd say on a scale of 1 to 10, 10 being the highest as far as my perceived level of understanding. And I bunny ear that because I think that everybody only has a perceived level of understanding, because I don't think anybody really knows except Satoshi Nakamoto, which is a person, place, or thing, or idea at best. Hell, it could just be a software program created by a supercomputer for all I think. I don't know. I don't know. I just think that I can make money with it. I have made money with it. I mean, it's been my best performing asset class in the portfolio, but I'm like at a 2 as far as like level of understanding. So I don't sit here and spit too much on the miners. I don't really understand the whole jewels and stuff. I like that Jason Les was a poker player. I aspired to kind of like be as good as he was, not even close as far as poker. So I liked when I found out that he was the CEO of Riot. I liked that they locked in the energy deals with ERCOT till 2027, 28, all the way to 30. I like that they locked in the land in Corsicana. So they had the infrastructure, they had the mining deals. They went to Texas because the kilowatt per hour was the energy was better. They worked out the energy credit deals. I think Bitmain was in Texas as well. So they worked out deals with them. And now there's another company that I can't pronounce. So they got deals all over the damn place, and they were working and moving and grooving during the last crypto winter. So they were trying to like get their infrastructure in place, but I don't really fully understand still. That's why we're going to the round table. And I just want to see, okay, I know y'all got money on the balance sheet. That's why I like you guys a lot. And I know that y'all got the energy thing on lock. I like all that. The buildings look real pretty. I can touch them. I can see them. I can feel them. I like all that. But how long will the money truly last if Bitcoin doesn't perform? And that is what I want to go over there to this roundtable discussion. And I need to be able to ascertain that so that I can just be very, very objective. Because when you do formulate, going back to the title of this thing, I think too much due diligence gets a little scary and counterproductive at times, because it gives you such a big confirmation bias that you're just not willing to look at any bear cases. And that happened to me with IDEX. There were so many obvious bear cases looking back, bro, and I just was not willing to hear any of them. And I wouldn't even spend any time with them for the last year while things were unraveling right before me. Could have probably saved $100,000 on that. So I wonder if that's what could, I mean, because somebody put Tulip Mania. I was on Finance Junkies and I pulled up Tulip Mania. There was a lot of people that didn't even know what that was when I mentioned it on Finance Junkies. Tulips were a thing, dude, a long time ago. And people were like giving an arm for tulips, bro. Tulips.
Giving a third arm.
This happened in this lifetime. This isn't like the moon landing, or maybe yes, maybe no. I'm not sure the earth is flat, that kind of thing. I don't know. Did this tulip mania happen? It's documented. And I'm just like, dude, so is this just like the modern day tulip mania? I think that's a podcast worth having with 2 bulls and 2 bears. And like really go at it, because I mean, I think to think that it isn't at least a possibility, I think you're smoking a little too much weed here. You know what I'm saying? Like I mean, it looks real, it feels real, it doesn't mean it is real. So I don't know. That's my thing. What about you, Garcia? And then I got to ask you something, because we're going to be in San Diego and Irvine for the Riot conference. How familiar are you with those areas?
Oh, dude, Irvine is like it's like what is it? Sanitized. It's pretty safe. It's very it's pretty safe there. Probably like the safest city in Orange County.
Hey TJ, I gotta run. But before Before you get off, just read Matt Money's comments about me.
No, don't.
Right here. Don't worry about
If you want to
Bitcoin.
stay monetized, don't.
Is that where we're going? Where?
I think it was funny.
Go
He had
Oh,
some
y'all are
good
crazy.
reminders.
Matt,
I don't-
Money, what's going on here? Talking about members of bodies. October the 17th in
All right, guys.
Irvine.
See it.
All right. Bye,
Appreciate it.
dude, and I think I'm leaving because I'm visiting California for a couple weeks, but it's dang, I think we're gonna miss each other actually, just by like a couple days.
We leave on this. I think we're gonna fly out that morning because there's a flight here at like 5:25 in the morning. We get over there at like 9. We'll brunch it up, have a cool lunch, and then I think the conference is in the afternoon or the evening. So we'll do that whole deal, and then we're gonna stay in the area.
Okay.
And then the next day we'll grab a rental, and we're gonna shoot over to San Diego for the long weekend.
Oh, nice. I mean,
Because I've only been to San Diego one time, dude, and I just remember it being like super pretty.
Diego's
And
beautiful, man. Almost any time of year you go to San Diego, it's sunny, the temperature is nice, the weather's nice. It very rarely has bad weather, even better than Orange County. Like every time I go to San Diego, it's always been a blast.
October the 17th, I believe, Heinze, and I believe that I'm no one special, dude. I think anybody can go to this thing. You got
and I'm leaving the first. I fly out that Monday.
What day, Garcia?
I fly out the 14th because I'm going over that weekend, the 12th through the 14th for a wedding.
But you will already be gone by the 17th.
Yeah.
Oh man,
I know. There's so many
What
good spots.
about you, Heinze? Where are you at? And then what about my wife said that Stephanie was from that area, that general area.
I think she's like from I don't know what area. I don't know if it's LA County or Orange County. You have to ask her.
Yeah, she was cool, dude. Her and my wife really hit it off too. So I thought it would be cool if we could somehow meet up with her. But I'm not in that WhatsApp thing anymore, dude, because I got so tired of all the notifications. I turned off my own WhatsApp for the Wheelers, and now I have it on the Wheelers phone because dude, it would drive me crazy. And this phone don't leave the office. I was like, dude, it was like 100 notifications a day. Yo, nobody got time for that.
Yeah.
So I don't know. What about you, Dallas? I mean, where are you at with Bitcoin? Are you just gonna hold on to your ideas of exiting because you hit a certain dollar amount that you wanted with this thing, or where are you at with that whole deal in general?
Yeah, I'm not looking at the price. I'm looking at I have about 7 different indicators, and that's the beautiful thing about the blockchain is you can see everything on the blockchain. So there's a couple of different indicators that I'm going to use that when those start firing and say, hey, you should probably think about getting out right now. I'm going to listen to those no matter what, and not normally like right near the top, something big's going to happen that's perceived as really, really good for crypto. And that's the whales exit liquidity because they need people to sell to. So something really, really good is going to happen. A bunch of more people are going to flood into Bitcoin, and then that's going to be time to get out. It'll probably go up a little bit more, but it's just going to wick up, and then that'll be it. So I also have certain, I guess, indicators or parameters met that if this goes down to a certain price, I'm going to start scaling out as well. Because it's not like I said, me and Bitcoin are not married. So if let's say if 72 or 4,000 or whatever it was the top, well, I'm not going to ride it back to another crypto winter and just hold on and wait for everything to come back up. But according to, if you do believe, subscribe to the 4-year cycle theory, you want to be out by the end of 2025. So I'm going to be out by the end of 2025, regardless of where the price is at. Now I'm in altcoins, so I've also additionally set a certain percent return that if I hit those, I'll probably be out anyway, regardless of where Bitcoin is at, because that's going to put the portfolio in a really great position, and I don't want to possibly jeopardize some life moves that I'll be able to do with that kind of money. So even if that happens as well, I'm like, okay, this is what I was looking to make. I made it, and now I'm out. Even if Bitcoin's still looking very bullish, but I've got probably 7 to 10 indicators that when those start flashing, I'm going to be out. Doesn't matter what's going on in crypto.
I hear you. How much time do you guys have? Because I wanted to do a segment that I thought you guys might be able to help me with called Fix My Trade.
I got
Sure.
till 11:30.
I got
And
time.
my wife, surprisingly, I think she already went to sleep. So, guys, I'm in the clear to marathon this thing a little bit.
No, I can't do it tonight.
No, but I'm just saying because she'll come in here and she does this little, and she weighs $115, and I'm scared. Yeah, dude, I'm afraid. I'm terrorized her. Like I'm like petrified when she comes in here and she sticks her pretty little face in the office. And she does this thing here, and I'm like, oh Lord, what? You want me to go paint the house? What do you want me to do? I don't think that's going to happen tonight. So I have a situation with Palantir. I've got a situation with Palantir, and I cannot convince myself on how to play it. So I feel like the chat relies on me a lot. So now I want to rely on you guys. I got a little panel here, and let's play a little game called Fix My Palantir Trade. Fair enough?
Sure.
So let me walk y'all through this situation here. Here's the average cost up to 23,000 shares. So it all looks good on the surface, right? Can we all agree that if that's the end of it, we're looking pretty good?
Yeah.
Yep. Pretty big return.
Yeah, pretty decent. It looks very Bitcoin-esque, right? Very, very riot-esque. I mean, because the miners have made a couple mil. So I'm super bullish on the miners on this channel. So like everything's good. They're serving filet mignon on the plane. Everything's like great, but I'm still on the plane. You know what I'm saying? So I mean, it doesn't matter if you don't land safely. But I thought it was a good idea to sell covered calls. So now let's look at this bad boy here. I've got $12 covered calls for January. And then I've already remedied these. I've got 30 calls at 45 for January of 26. And I've got the meat of the position, 150 of those at 35 for January 2026. So now let me give you all a little backstory before we deal with, obviously, the issue is these guys right here. And the segment, we can call it, because hopefully Alex will watch this, and it'll just be to roll or not to roll. Like sometimes does it make sense to just let the shares get called away? And let me walk y'all through this, and then just give me what would you do? And I'm going to listen very, very intently because I'm not convinced on what to do. And that's okay. You're going to find yourself in this position in life. You're going to find yourself in this position when you're selling puts and calls and deciding to roll if it makes sense. So the one thing that I want to encourage you guys to do is reach out to help from the community because we're here to serve. Fair enough? So I'm reaching out, I'm extending my hand out, and I'm hoping somebody will grab it and help me get out of my own head to navigate these waters. Fair enough?
Yep.
Give me a thumbs up and we're good. So I can go on the soliloquy on how this happened. I'm not as bad a wheeler as it looks right now, but sometimes these things go on a meta universe thing or a metaverse trajectory, and it gets very, very difficult to navigate. So I want to show all the gimmies and gotchas with what we do here. So that's
the same thing happened to me, TJ.
Yeah. Well, hopefully
I think
did better than I did.
I think I've been able to move. I'm trying to look. I think I've gotten mine up to 19. I've been rolling those for years now. They started out at 14.
Right.
Because I remember I bought a bunch at 7, 8, and 9. And I'm like, okay, I know this thing can really run. So I was selling like 0.1 deltas, you know. So luckily, I remember when I sold those, I started at 12.
Right.
And let me check real quick.
So what I like to do, Dallas, while you're doing that, is let me just walk through how this position happened. So this is from the inception, and this portfolio.
19.
Go ahead, Dallas.
Yeah, 19. I've been able to get them from 12 to 19, but it's taken me ever since Palantir was in the $9 range to get them from 12 to 19. However long that is. That's how many rolls it's been.
Right. So on July the 18th, I thought it was a good idea to sell 50 contracts on Palantir and picked up a cool 1655. Bought to close those contracts, gave back 450. So I'm feeling real good because this is a new position in this portfolio. I had already made quite a bit of money in the little Robinhood at the time because I bought the DPO and I sold in the 30s. When it ran out, I got a call from Alan, or it was a text from Alan Shin, and he was like, "Hey, this shit's bonkers. It's overvalued. Sell now." I didn't even question the man. Asian dude. I use all the biases and prejudices. They're usually smarter. Like I literally, that was what was going through my head. Alan was smarter in college. He's probably still smarter. So he says so. I sold. I didn't even question it. Didn't look back. Then Palantir started dipping, and I wanted to dip my toes in the sand, right? But by this time, I was already in this portfolio. So I did it again. Sold puts at 750, rolled puts, got 1550, rolled more puts, got 3250, and then Palantir really started taking shit. Sold 50 contracts at 650, bought to close those for 200. Looking back, I wish I just started buying more shares, but you don't know what you don't know. I don't have a crystal ball, and if I did, I probably pawned it a long time ago. Then did 20 contracts, bought to close those, and I'm just messing with this thing, just trying to figure it out. You don't see any covered calls here until now, because now I decided I need to like own some shares and I want to start doing some strangles. And then, just doing the same thing. But now I up the ante because I'm liking it. A couple earnings reports have gone by, right? So we talked about going through the seasons. We're in July of 2022. So now I've got about 3 earnings reports under my belt at this time when I start upping the ante to 100 contracts, right? So I'm like, okay, this is great. I think that this company might be onto something, but this might be around the time that they were getting punished because Alex Karp famously said we're not going to hit 30% CAGR anymore. Y'all remember all that? So this price action here on the puts and calls, it tells a story. So if you remember the story of the company, it all kind of makes sense. It all kind of made sense why Palantir was in the shitter because they had projected for 30% and now they came in, I think it was like at 17 or 18%. And it sucked. So they got punished. But I was like, okay, cool. I believe in them long term. So let me start accumulating. And then I started getting in trouble on covered calls and I started rolling over here. And you'll see that I rolled from 8 to 9, and I had to do 4 months for that because I got caught with my hand in the cookie jar. And these are the 5,000 shares that are for sale at $12 right now. So what I should have done is just lost about 4 or 5 grand and been done, but I didn't know that this price action was going to occur. So again, this is the level of transparency you're not going to get anywhere else. Uncle Henry, nephew Henry, he can't touch it. He won't do it because it just takes too much time. So now we're going to go here, and this is where I went, screw it. I'm going to go from 616 of 2023 to 119 of 2024, and I went from 9 to 10. And I'm like, oh, Palantir, I'm sure it's going to slow down at some point. And then I hung on for a while, and then I just couldn't do it anymore. And I rolled it from 10 to 12, which is where we're at right now, and I got a cool 1,500 in credit. So now just to put it in context. So just to put it in context, we're going to stop there for a second. What is Palantir trading at right now, guys?
3706.
Okay, so we're going to take the calculator out. So it's 5,000 shares. Oh, I got one too many zeros there. Times what?
Well, right now 37.11 overnight.
So that's worth $185,000. But I've got an agreement to sell them for what? $12 times the 5,000, $60,000, right? So you subtract the 60,000 that I would get on the payout. So that is a legitimate material number there, meaning I'm leaving $125,550 of capital appreciation on the table. You know, like that whole thing, like we won with the crystal meth guy, whatever his name was, Breaking Bad.
Oh yeah,
So the
yeah.
on this one was we lost. We fucked up, right? I'm just saying. So let me tell y'all what I did to start remedying the situation because I saw the movie playing out back over here. So I was sitting in the hotel room, Omni Hotel, September 22nd, 2023 in Houston, Texas. And I go, I don't know if I'm going to be able to stop this train. I don't want to stop this train. We got a little bit of money. Thank God for that. Let me just buy 5,000 shares outright. And I did that. And then I immediately sold cover calls against those because this didn't teach me anything. Selling cover calls is good. So I'm going to do it and I'm going to get a rebate of 27 cents. And I remember Dallas made a comment on my live when I was doing it saying, hey, you think that's the best idea? And I'm like, that's a buy right strategy. I was there, Dallas.
I said it was buy wrong. I said you should start calling that the buy wrong strategy.
But then 5 days went by and I go, I feel like this isn't fixing the money that I'm leaving on the table over here because I had now put a $25 price target on Palantir because Bill had already chimed in and given me fair market value and all this shit for Palantir. He'd given me a discount cash flow model and I'm like, holy shit, this thing makes sense. This thing's not overvalued at all. I'm just stupid. I don't understand how to value this company. And this is where due diligence comes in is you got to know what you own, right? And how it trades and all of that other stuff. You got to learn how to make money off your asset. So then I was like, I need to buy more shares. So I bought 5,000 more shares at 1470. And then I sold cover calls against those too because I haven't learned anything yet. I'm a hard head, right? So I haven't learned anything. And then here I am having to roll those already, but I roll all 100 of them at a time because the shit has gotten away from me and I've already gone. I bought them to close at 16 and I sold to open for 18 for the end of last year. And then I'm like, okay, cool. Let me start getting some of the premium that I'm going to have to give back when I deal with those $12 cover calls. I feel like I was safe over here. So let me just start selling more puts. So I sold 50 puts over here at 15, gave back 1,400. And I'm like, win 1,100. I'm putting that in the piggy bank because I'm going to have to roll for a debit down the road. This was the thought process, guys. So I'm giving you guys behind the curtain Wizard of Oz shit that you're not going to find anywhere else. Give me a thumbs up if you guys appreciate this kind of transparency. This is taking it to a whole new level than I normally do on the channel. And then I was like, let me do it again. Let me try to see if I can lock in more money via credits so that when I pay out the debit, it doesn't stink so much. So I sold puts at 17 and then I sold more puts at 17 and I collected 2550, collected 4,000. Sold another 50 puts, got 3850. Sold another 50 puts, got 2850. So you guys can see there quite a bit of money. And then I went crazy and I sold 200 puts and I got 16,000. Sold 200 more and got 11.6. I've gone ape shit with Palantir at this point on the puts. And then I'm like, oh shit, now I got to roll because this shit's getting kind of tight. And I was able to roll 200 contracts and I got another 12.7. And then I roll again and I got 6,400. And you guys are seeing it all right there. You know, the 17s. And I just rolled laterally, kind of like what Garcia was talking about. I got greedy. I wanted the premium. Did it again here. Probably rolled laterally. No. I got conservative here. I took 50 cents off the table. Woohoo! But it's 300 contracts. I'm in deep. You know what I mean? I'm elbow deep into the bag of fries at this point.
Yeah. But then they crushed earnings. So that's where you got saved.
Yes. So then I started rolling covered calls too, because these damn things just doesn't want to stop. So I go from 18 to 19 because I wanted to take advantage of the volatility because of earnings. I think was on my birthday on February the 5th. I was in San Antonio when I was doing this over here. And then I buy to close all those puts. And y'all see that right there? 3,500?
7 cents. Yep.
And look at how much I had collected along the way. Can y'all see all that? I mean, I'm giving it all to you. So in other words, I made a shitload of money. It was about $60,000. I remember doing a video on it, and I talked on Amit's channel about it because we were already doing our little deal. And I was like, dude, I just made $60,000 on PLTR, yo, locked and loaded. It's done. All the money's on the table. 500 contracts, dude, at $17, $1,700 a contract times 500 came off the books. And I'm looking real clean, and I locked in a really, really big win on PLTR. So then I start buying to close more of them, 100, because stupid Robinhood, you can only do 500 contracts at a time. So that I did the other 100. So I gave 6 cents on those. And then I'm still dealing with these damn covered calls, rolling covered calls on 100 contracts. And I went from 19 to 19. I just rolled out because I wanted more premium. Then I roll again, and I go from 19 to 20 this time, but I had 3 months of the contract in order to go out and up. And then now we can look at all the price action on PLTR and what was going on. And then I just got sick of it, dude. I got sick of it. And I said, screw it, I'm done. And I went from 20 to 30, January of 2025. And I got $16,000 for doing that because I was done. It was just mentally starting to exhaust me, and I didn't want to mess with it. I wanted to lock in some potential capital appreciation because at this point in my journal, I had already put a $30 price target on PLTR, and I had also told myself if it gets to 30, I'm just going to lock in the win because the valuation doesn't make sense. And even if it keeps running, I'm not going to care because I've made so much money off of it. I'll go find something else that I understand a little bit more. And I can just say, I never understood PLTR. I never understood the valuation, but I made a shitload of money of it. But I also left a lot of money on the table, and I was okay to do that speech at the time. Y'all following the story so far? So I'm not as dumb as maybe it looks because I accumulated a lot of shares after the fact. Once I knew that I had screwed the pooch on that $12 cover call, instead of rescuing it, I'm like, let me just go create a brand new position in my mind. Were you with me so far?
Mm-hmm. Yep.
So then
I gotta go soon.
I start closing out. I sell more puts. I got 2250 over here. Closed. I rolled puts, got 900. And I buy to close for 1,200, so I lock in another little win there. And then I'm doing it again. I sell puts 2,400, 48.75, or 77, 24.50, and then I buy to close for 7,400. I did okay, not great, but I made over $1,000, so I was happy. And I'm doing it again because PLTR starts dipping a little bit, and I'm starting to feel real smart because I got these $30 cover calls in the distance that I had gotten paid $16,000 on the roll. So I'm feeling real good about it, dude. And then I sell these puts. I got 2,300. Sell a shitload of puts. Got 10,050. Roll those puts. Got 22,000. So I went from a 22 to 22. So just a lateral move for about 3 weeks. Got 22,000. I'm like, this is crazy. And then I remember posting this on X. I wish I had it queued up. I didn't know we were going to go here today. But I got ridiculed so much when I posted that I bought an additional 5,000 shares at 2047. I think that post I got made fun of the most out of any post, and I've done 4,000 or 5,000 posts on X. People,
and that was the bottom since their earnings since February.
Bro, people laughed at me, dude. They laughed at me, but I'm like, I'm gonna do my buy right strategy because that's been working so well. But I'm gonna do it in the distance this time. And I'm going to go match up the other $30 cover calls. So I bought 100,000 worth, 5,000 shares this time. Remember, I was paying a lot less for them in Houston, right? Where it was at $14. And then I got a $9,200 rebate for selling them in the distance because I didn't want to mess with it. And I'm going to just go over here and play cash secure put game. So I'm getting 7,700, 12,000. I buy to close for 4,000. So it kind of worked out over here for about 3,000. And then we'll see how this one plays out. I buy to close over here or sell more. Buy to close Palantir, 50 contracts at 37 cents. And I had gotten, 60 cents. So I'm kind of like working my way through it. And I'm doing it over and over and over again. But then I see the writing on the walls. Palantir just won't stop. So I'm like, shit, let me just pretend like I don't have those 5,000 shares that I'm going to sell at 12. And let me just go buy them back yet again. And I'm going to do 500 at a time on a MITS channel on Fridays. So I started doing that. I did 500. I did 500 4 days apart. I did 500 about a week later. This is on the MITS channel. And then this was potential S&P inclusion. So I said, you know what? I'm going to buy another 500 because if they get in, I want to be able to run up. So I scooped up another 3,000 shares. Since
I got a bone. Speaking of S&P 500 inclusion, I got a bone to pick with Garcia. I'm not sure if he heard me mention him in my video last week, but last Friday was the inclusion, right?
That was the announcement. Yeah, he announced it.
And last Thursday, you did a video saying, because I watch all your videos, you did a video on Thursday saying like, oh, I don't want to hold, as many calls as, I want to hold as few calls as possible into the S&P inclusion because I don't want to risk it. And like, I don't follow Palantir that closely. So I was like, oh, that's a good idea. And then I had like 600 shares at like 35, maybe 34, 35 calls. And then Friday, I was up on those calls. And then I was up like 40% on Friday. And then after the close was when they had this. No. These were cover calls.
Okay.
I had like 600. I had like 6 cover calls on at like 35, 34 strike price. Yeah. I was like, all right, sweet. These are up like 40%. I feel pretty good about these strike prices. I'm gonna just let them run. And then Palantir obviously got included, and I was like, dang. Garcia said that they were going up for S&P inclusion, but I didn't know you were talking about the next day. I was like, man. I would have closed them out. So now I'm rolling them. I had to roll them out a couple months.
Oh shit, dude. Yeah, dude, I've been scaling back so much, dude. I actually bought back some calls at a loss a couple weeks ago. I ended up just biting the bullet and just taking a short loss, and I just, it all added up, to being a positive, overall credit throughout the year. But
yeah.
So just to bring the point home, guys, so that we finish this segment here on Fix My Trade.
Mm-hmm.
And we agree that I made a lot of money. I locked in a lot of money along the way, selling puts and calls on Palantir to this point.
Yep. Oh yeah.
I mean, it's all there. I mean, we went through the books. Fair enough. But then now I had a big decision to make after the inclusion, because then my latest discount cash flow model came in and the price target came in at like $40 for Palantir. Like it could like really grow into that in a couple of short years time. And then it's real bullish. AIPCon, I streamed the thing on accident. I didn't know that it was going to happen while I was on the live. And then now 3 hours later, we're still on the damn live stream. You know what I mean? So anyway, I came away feeling bullish as ever on the company. So I was like, well, let me just roll these covered calls out to January 2026. And I'm going to use that premium to finance the roll for a debit on the others. So I rolled
2026 or 2025.
No, I rolled remember I had all the covered calls at $30 for 2025 January. Yeah. So I rolled all of those from 2025 to 2026. Because remember, I had only 100 at the time, but then I bought more shares and I did the buy right strategy because it's been very successful. And I went from 30 to $35 and I picked up a cool 26.
Wait, when did you do this?
This is recently, September the 16th.
I don't remember you talking about rolling these out to 26.
It didn't happen on the stream. I did it offline. So then I did 26, 22.50. I got that. And again, this is all money that I'm supposed to use to go pay the piper on those $12 covered calls if I still wanted them on the books. And this is where you guys come in. And then I rolled the $40 covered calls because I had done some buy rights and I put them at $40 for January. But I'm like, I don't even want to mess with them. I just want to put I need to finance the debit with credits. So I didn't really want to roll these. I didn't need to roll these. I did it so that I could I can use other people's money to finance my error, right? So I went from 40 to 45 and I got 1744 for January to January, from 25 to 26. And then I rolled 25 to 26. And again, I'm sacrificing extrinsic value. This is not optimal situations. I'm just trying to find money. You know what I mean? Like this is going to the pawn shop. You know, you're not getting the best deal, but you need money. So this is like, I'm showing y'all all this stuff that you're not going to find on any other channel. I don't give a shit how big they are. And they came to be the best options trader in the world and all that shit. You're not going to find any of that stuff. You're only going to get this here. That's just the reality of it. So I got 8,700 here. So I got 8,700. I got 1,775 and I got 2,600. It adds up to about $37,000. So now let's go back to the problem. The problem is, when it came down to roll these $12 covered calls that have been a pain in my ass for a long time, and I put a $20 price target on them. I wanted to roll them in the distance, but I wanted to go from 12 to 20 because that qualifies me for $8 more in capital appreciation on 50 contracts, 5,000 shares. That's $40,000 in capital appreciation. That's the goal of the roll. So whenever you roll, whenever you're in a bind, you first have to formulate a goal. What's the goal? The goal is I want to capture $8 more of capital appreciation, but the amount that I have to pay to do that, it has to make sense because it has to produce a significant ROI. Because if it doesn't, I can take that $60,000 during the same time frame and sell puts and sell puts and sell puts either on this asset or something else and probably outperform all the dead money that's going to be sitting there because I'm still underwater. So this is where you got to really just get out of your emotions and go play a game of math, because I could technically just let the shares get called away and the Palantir position is a lot bigger than I probably ever intended it at this point anyway. And it's been a very, very successful position. And just accept the fact that I left $125,000 on the table. But hell, I probably made about that along the way anyway. So it's kind of a wash. You follow me? Mm-hmm. So I went to roll and I didn't like what I saw. I'm serious. And I'm talking about, dude, I even went all the way over here, 849, because I got to make good on 2465, right? So I can't catch the stock here. Let's just say I want to put a 40 handle on it a couple years down the road, 2.5 years, however many days that is. And that shit's still going to cost me 66.5. But then I'm going from 12 to 40. So I'm capturing 22, 32. I'm capturing $28 of capital appreciation times 5,000. Let me use the calculator real quick. So 28 times 5,000. So I'm capturing $140,000 in capital appreciation, but I have to pay $66,500 for that. But the reason that didn't make any sense is what if Palantir fails to perform? I sacrificed $66,000 in premium just to watch the stock go back down to potential fair market value at like 25. Or whatever that ends up being. I don't know. Boy, how dumb am I going to feel when I could have just let those fucking shares get called away, count my lucky stars for all the shares that I bought after the fact. Because instead of fixing the trade by taking the L on the covered call, I chose just to double down on the position and act like I was starting day one at $14. That was the mindset, right? And I'll see if Palantir comes back, it reverts back to the mean, all of this stuff. All of this stuff. I mean, dude, I'm giving you guys squealers 101, 201, and 301 here tonight. This is a fucking masterclass you're not going to go find anywhere else at any prices. You're going to get in a situation like this, and I'm showing you the thought process to navigate it and get out of your fucking emotions because there's no money over there. Emotions cannot help you solve this algebraic equation right now. We're solving for X. So I'm like, it doesn't make any sense to me because there's too much opportunity cost on all sides because the bird in the hand is twice as valuable as the birds in the bush. So I'm like, well, that doesn't work. Let me save some time off the clock. Let me maybe go over here and match it up with the other covered calls. And let me just go back to that 20 handle that we talked about because that was the original objective. But I'm like, shit, I'm only going to qualify for $8 more in capital appreciation, which is 40 grand. But I got to pay 27,600 for that, which only leaves 12,400 or whatever the math is of meat on the bone there for me. Is that really worth it? But I'm at least going to also be able to lock in a loss on that covered call, the roll. So maybe that helps out on tax purposes, but I don't really know how it works because that shit's a little bit, it just kind of gets lost in the sauce, right? It gets mixed up with the rest of the soup whenever you sell as many options as I do for a living and you roll so much. Sometimes there are wash sales at the end of the day that they tag you with and you don't even know how they happen because I do 3,000 or 4,000 transactions per year. So I was like, I don't know if that really works because if my net positive is only going to be 12 grand in 485 days, I think I can kind of make more than 12 grand doing something else with that $60,000 and just eliminate the headache and forget about the 125,000 that I'm leaving on the table. Forget about that for a second. I'm talking about what can I do with that money? So that's where I'm at right now. And I don't think that I was going to say it on the live or ever, but I'm kind of leaning towards you can have your fucking shares. I don't want to give you back any premium. And I'm okay with selling these shares at 12 because I bought them at like 6, and I didn't get a lot rolling them, but I made a lot of money out along the way. And it's still going to look okay because even recently I bought 3,000 shares that I couldn't even justify doing. It just kind of worked out because of the price action. But I can't look anybody in the eye right now and be like, oh, Palantir at 37. That's a great deal. I'm not loading the boat here.
Mm-hmm.
Like, I feel like the chances of Palantir going down are a lot higher than Palantir going up. But I've been wrong for a couple of years now. So take that for what it's worth. Garcia, you're the resident Palantard here. What
I'll
say
pass it to Dallas. I don't know if Dallas, if you still have to go, maybe you can go first.
Okay, go ahead, Dallas. I'm sorry.
Two things that came into my mind while I was listening to this. Number one, I think we could also do a segment one day on lessons learned for this.
Because I learned a lot.
But it's the reason why I was thinking, like, would I have done anything differently when you were going through the whole story you just went through? Because it's easy to say, like, you should have done this.
Of course.
But I think, honestly,
it already happened.
I think my advice would have been like when we had this recent Japanese carry trade to pick up some loops to help
That's
you.
when I should have fixed it, bro. I was just
when you should have fixed it.
I was dealing with a personal issue on that day.
Yeah.
I was dealing with a personal issue on that day, my tooth. And I put it in my journal, fixed the Palantir trade. And it was the only box on my journal that I didn't check that day.
Yeah, I actually gave
me an opportunity to roll these for $21,000. And now it's like, okay, I'm paying 21, but I'm gaining 40. No brainer. This shit would already have January 2026 with the 20 handle on it. And I'd be feeling pretty good about it because I feel like 20 is my absolute. I just don't see a world where Palantir goes below $20 ever again, unless there's some sort of a split.
And that also would have been a good time to pick up some leaps, which would have helped you as well. I'm just trying to look at really quickly. So Palantir dropped to 21 almost $21 during that Japanese carry trade, and now it's at 36. So those leaps already would have been up like crazy. But I really can't say that like I would have done anything differently than you, because I remember how painful it felt to buy Palantir at $14.
Bro, I did not want to buy those shares, Dallas.
I remember
Hand of God, I thought I was overpaying for these damn shares, and I felt stupid doing it. And it was documented live on my channel, yo. And I was just like, why am I even buying these? Like, I gotta stop listening to Amit's channel. Like,
yeah.
Like every time he talks about a contract, I want to buy more shares. You know what I'm saying?
Yeah, I remember you were in like a hotel room, and I was at work.
Hotel gallery in Houston, bro. I remember like it was yesterday, bro. I didn't want to buy those shares.
So with that being said, I can't really say, because you could have gone through this same exact thing when it was at $14. Like, oh, should I roll my my calls I already have? Should I roll them now? And the thesis probably would have been, nah, it'll come back to like 10 or 11. Roll them then. So I can't even say I would have done anything differently. I know one thing I added to the options blueprint a couple weeks ago was something I never really thought about it. And that's when we get big drastic dips like we did during that Japanese carry trade. Not only I was more focused on like, what stocks can I be buying here? I wish I would have closed some of my covered calls, because right now I got Amazon 150 calls, and Amazon came down to like 155 during that time. And so I could have closed those calls for dirt cheap. And then now I have all of my shares unencumbered again. Amazon's back almost at 190. So I think we could do a whole episode on lessons learned from this whole Palantir experience. And I think one of those is whenever you get a big dip, let's say you just have 10 covered calls, maybe buy back 3 of those. If it's something that has nothing to do, because that had nothing to do with Palantir, that's macro stuff. Right. But we got an opportunity to buy those back a lot cheaper. So that's something I can't even say I'm disappointed in myself, because it wasn't even something I thought of. I actually thought of it because a couple weeks ago, I was watching your video, and somebody put in the live chat, like, TJ, why didn't you roll these calls back when they were much cheaper, when the market sold off that day? And you were like, I didn't even think of it. Like, I got so much going on. It didn't even pop in my head. And I thought about it, and I was like, I didn't even think of it either. Yeah. I was just trying to figure, like, what stocks can I add to? We got CrowdStrike at $200. We got all these deals going on. It didn't even pop in my head. And if we're honest, it kind of sucks to spend your buying power buying back covered calls gone wrong. That sucks. So it wouldn't have been my number one priority, but maybe I would have bought back a few of them. So I think that's something we can use in the future. I would not roll them all the way out. So you're basically saying, should you roll this to $20, right?
Or roll it at all, or just have the shares get called away, like, because I didn't realize how good the premium was going to feel when it hit the buying power, because I got all that premium money here recently on the 16th when I rolled the 40 to 45 and the 30 to 35. So essentially, this goes away. I accept the fact that I left $125,000 on the table. The only reason I've considered rolling is because then now I could have a tax harvest loss in here somehow as well. Alex also pointed out, why not just buy to close? Because that's $123,000, and that's a tax harvest loss. And then now the position's intact. Or I could just finish buying use the money, the $60,000, right? And 2,000 shares is 74 grand, and just live to fight another day by doing that. And I end up right back at the 20,000 shares that I had.
Why do you feel like you want to go from 12 to 20 instead of just 12 to 13?
It's just, again, this is why we're having this episode, because it's just an idea that got into my head about a year and a half ago. Maybe the idea made sense then, but because of the situation that we're in, it doesn't necessarily make sense right now. Not the dollars don't make any sense.
I think, of course, you could have said this all along the way, right? But it could possibly be due for some sort of pullback. So, what's the extrinsic value on those contracts?
There is nothing, dude. I'm
I would
surprised they're selling these shares. Look at them.
I would roll it if
Look
it
at
was
this.
me.
Look at that. Let's do the math. What's 12 minus 37.19? Anybody? I got a calculator right here. So 37.19 minus 12, 25.19. I mean, technically there's less than zero extrinsic value.
You want to go based off of what it closed at though, at market close, like 36.40 was where it closed.
I think good point. Turn 36.40 minus 24.65.
Yeah.
Or I'm sorry, minus 12. 36.40 minus 12. So that's, dang it, I can't do math. 36.40 minus 12. It's 24.40. So there's 25 cents.
25
I would
cents.
wait 25 cents of extrinsic.
Yeah.
Yeah.
Yeah, I would wait for it to get to like 10 cents, and then I would just go from 12 to 13. That enables you to buy yourself time to where basically, right, if you roll it right now, you're rolling at you're paying the maximum because of how high the shares are. I would just buy myself a little time to make sure that the shares don't get called away, and then
there is still 121 days on this contract.
Yeah, so let it come down to like under 10 cents, and at that point, I bet you during that time, Palantir will have a pullback, and then you can strategically. I wouldn't even roll all of them. I would just roll them in tranches.
We see even adding 3 months to the contract and going from 12 to 12. I've already played this game, by the way. I only net 750. So it's like, what can I do? What can I do in 6 months with $60,000? Surely I'm going to make a lot more than 750. These are teaching segments that are so valuable for people if they take the time. I really want Alex to clip this because you're going to find yourself in these situations and you're going to look at it and the numbers are going to tell you what to do if you're really willing to listen. And right now, the numbers are telling me to let the shares get called away and just accept the fact that you left money on the table. It happens. You got to know what it is you signed up for. Don't put them up for sale at 12 or you don't really want to sell them for 12. That's the lesson that we already know. I'm just implementing it. So I played that game already. Unless I'm willing to do a handle over here, January 2026, match up all of these other guys, and now go from 12 to 15. It's 68.50, but I qualify for $3 more of capital appreciation, which is 15,000. So a net positive of about 7 or so, 71.50, whatever the math is. I'm just doing it off the top of my head. I could be totally off by like $1,000 there. Even that doesn't feel that exciting unless I can convince myself that somehow that's a legitimate tax harvest loss that I've created by doing it. But I would have to verify that first before I would play that game right there, if that makes sense.
So I think if you think about it this way, for you to roll from 12, like to ever hope to catch up to the stock price is going to take literally years, like years and years and years.
And I'm okay with that as long as it makes sense to roll it, because you got to look at two things. It's the money that we're leaving on the table.
That's right. Hold on. Let me finish.
Look at what can I be doing with that 60 grand elsewhere?
Let me finish.
Okay.
So we know statistically we get stock market crashes within a 5-year period, we can expect 1 to 2 crashes every 5 years. Crashes means a decline of a minimum of 20%. It doesn't mean it has to go down like 50%. I think when people hear crash, they think like Black Monday type of situation.
Right.
We get 20% declines 1 to 2 times every 5 years. I think the last one was during the COVID, right? So we know that in the next 2, 3, 4 years, we're going to have another crash. And I think you should just buy time, like roll it $1 at a time until you get low extrinsic value each time. And then on the next stock market crash, make that your mission to buy back as many of those as you want and strategically do it. Once you get that 20% down, not in necessarily Palantir,
Right.
but the overall stock market, those are going to be a lot cheaper. And then average in buying those back as well. Because last crash, the NASDAQ went down about 35%, I believe. So
Right.
Palantir could pull back 50% during that time. And then so that would be a good time to buy, really put money behind moving. That's like you may actually be able to 100% catch up with the stock during one of those moments. So I would just buy time, from now until then, just moving it up $1 at a time.
I like that suggestion. What say you, Garcia? Because this is another idea that I've been toying with. So let me
All right, I gotta go, guys.
appreciate you, Dallas, for all the wisdom there, because it's definitely a sticky situation that I contemplated probably at least 2 or 3 minutes a day, and that's a lot for me because I don't think about these positions that much, to be honest with you.
Yeah,
me neither. This one here is circulating in the brain on the regular.
Yeah.
All right, later, Dallas.
Later.
Appreciate you, my man. Much love. Yep. Much love.
So, I mean, for me, like I've been selling covered calls on and off pretty much all year this year, and I'm feeling, I guess, pretty good about it, just given that I haven't been called away on a single share.
Right.
I haven't really been caught too bad, but I did start getting caught around August, July, and August. If you go around to like the Palantir year to date, go around the August area, that's when I started buying back. That's when I started buying back some of the covered calls. So on August 7th,
this is when I should have fixed it.
Yeah, and that's actually when that was around the time that I started fixing mine. So on August 7th, that's when I started buying back my $26 covered calls. So I had $26 covered calls there, and I started buying them back at a loss. But the way I guess our situation is different because for you, you're trying to find money, when you're rolling, you're trying to like find this money. But for me, I was trying to, just because I was so sure about where the stock price was going to go, I just knew that if I didn't buy it now during the yen carry trade on Monday, on Wednesday is when I started buying back those covered calls.
Right.
So that, I mean, what Dallas was saying is right, where I kind of took opportunity of that short-term dip on Palantir or short-term crash to start fixing the trade, and that's when I bought them back. And I paid $1,900 for it. But I looked throughout the whole year how much money I made on covered calls, and I made like, I don't know, 14 grand, 13, 14 grand. And I said, look, if I made 14 grand and I'm giving back 1,900, but what I'm gaining is my entire position back and all of my shares are uncovered, and I'm totally fine with that. Like, looking back, of course, like it was the right time, because now those $26 covered calls would have been such a big pain in the ass right now.
Toast, yeah.
But I think buying yourself that time, I think, is going to be the best choice. As much as it's your thoughts kind of right now, I would think kind of like try to put it off to at least once a week, maybe like every Friday, kind of revisit the intrinsic extrinsic and see like if it's below 20 cents or at 10 cents. But that's it. And then just kind of make it a mission to just forget about it. It's not going to get called away. It's not going to get called away early because it hasn't been called away yet. But I think you are letting that get to you, where because you don't let stocks bother you in other plays, other positions. The fact that Palantir is bothering you now, you're just trying to get rid of that, kind of like mosquito. You're just trying to get rid of that annoying thought, and you're willing to pay money to get rid of that. Where you might be able to save money if you're able to just kind of somehow numb the sound and just kind of put it further in the back burner but once a week revisit the extrinsic value and say, okay, I'm at 20 cents, 15 cents.
Well, there's also a little feather in the cap if I'm able to navigate this successfully in 3 to 5 years for the next book. That's going to be really good material, right? So I mean, just calling like, dude, I'm giving you like 101% transparency now. I'm like, if I can successfully figure this out, it's going to have something that I have in my tool belt, right? Yep. So here's the issue. I really think Palantir are going to come back under 30. I just don't know when.
Yeah.
I don't know if I'll have the shares long enough because I think I'll be able to fix it because I'm going to gain some theta decay along the way, right? That Greek's always going to be working in my favor whenever you sell options. So I think that if I'm still able to be in this trade sometime in November, things will look a little bit different because I'm collecting that data. It escalates as you get closer to the expiration. So that helps me out some as well. Yep. Another thing that I've considered doing with the money, let the shares get called away. Essentially, I'm not really leaving that much money on the table because if I go look at the wheel tracker, I probably made all of that on cash secured puts and cover call rolling and all that stuff along the way. So it looks bad, but it isn't as bad because I lived that journey. So that doesn't really bother me, dude. As much as it probably should. Leaving that 125, that's not where the pain is. The pain is more in having the L on the books, to be honest with you. So now I'm like, okay, well, what can I do with that 60 grand that could give me the most value in Palantir? If I think that they are going to legit 10x, why ain't I looking at just buying leaps with that $60,000 for 2027? And I can go tell those leaps to go right that wrong for me, if you will. You would just have to wait.
You would just have to wait. Yeah, because right now I'm just looking at the RSI on the weekly.
I'd have to wait for a pullback. I'd have to wait for a pullback and redeploy that 60 grand via leaps because now it's a leveraged instrument and I can go grab that. It's easy to 2x those leaps and boom, theoretically. And I'd be able to get the money that way and maybe even run a poor man covered call campaign strategically against those leaps.
Yep.
Because the big mistake that I made here was instead of continuing to buy 5,000 shares like I did at the time.
Yeah.
And it happened in Houston or when I got back from Houston is I bought the 5,000 shares for 14 and some change. And then I bought 5,000 more. That's not what was in my journal that day. What was in my journal was to buy 50 leaps. And that would have saved me.
Yeah.
That would have remedied the situation. The reason I'm pondering this and I wanted to have this discussion, it's for my benefit, but it's also for y'all's, is because a loss can teach you way more than a win. It's real weird how this works, but dude, I can't even remember some wins, dude. I just can't. I know they happened along the way. The portfolio shows it, but bro, losses really stick in there. So I want to really talk about them and what I feel like I learned 3 or 4 valuable things here. And I just want to make sure that I really learn them for the next time. Because the obvious thing was the cover call starts going away from you. It's early. You lose 2 or 3 grand. You've already made 50 to 100 off the position. What are you worried about? like, be done with it. Let it run. Forest run if that's what it wants to do. But I got stubborn, dude. I got real stubborn. And it's the you want to be right versus you want to be rich. And I got stuck in wanting to be right as opposed to my mantra is like, you can be right, I'll be rich, I'm gonna have a lot more fun. So I didn't live up to my mantra, if that makes sense.
I mean, and it's just a matter of nature. Like we're just wired to avoid losses way more than we are going to remember the wins. Like you get 10 positive comments like TJ, you rock, TJ, you're the best, and then you get one comment that says TJ, you suck. The one comment is gonna stick out.
There's a guy on Twitter that's like, this fat bastard can't stop talking, dude. He hates me, bro. I think I phoned his girl back in the day.
I know exactly who you're talking about. And what I have noticed is I think there are bots. I think there are bots who are programmed to be trolls. I think there are bots who are just programmed to pick bones with everybody. So I know exactly which comment you're talking about.
There's a guy that constantly calls me a fat fuck on Twitter, bro, and I have it muted because whenever it says this comment from a muted whatever, I click on it because I want to see it, and I feel like
it's like you open the Jack in the Box and a punch goes.
Oh shit, bro. This is Wheelers After Dark already, bro. This shit don't even count.
Oh my god.
Dude, I swear, dude, this guy must have a video of me going to town on his old lady or something, bro, and giving it to her real good Shannon Sharp style or something. I mean, I must have made her toes curl, bro. He's angry about it, dude. I mean, dude, I don't know what I did to him. I think it's that kid SS that used to be on the channel, and I blocked his ass. I couldn't deal with it no more, and I think he got like a burner account, and boy, he's a fan, dude.
It could be. It could be because people make burner accounts, and legit, I really do think some are bots. I think some are programmed to just be mean as hell. Because I'll go through their comments and literally every comment is negative. And they're commenting under the Wall Street Journal, under the New York Times, starting fights, picking fights. So I do think there are accounts that are really just meant to spur controversy and negativity because it'll create more engagement. So, but I think that is, it's just the negativity bias, like in our psychology is real. Like it's,
Right.
Kind of. So going back to that is like you not wanting to be wrong, or you're letting it get to you so bad where you're willing to take, because yes, there is that money that you're leaving on the table, but you might be able to get out of it. There is a chance, but right now, looking at RSI, looking at where the stock is, this is statistically, odds are this is probably the worst time to be fixing it. Because I think this is kind of like where it's, and I've noticed too, when I look at some of the times that I bought to close a covered call or a cash you could put at a loss, that was the top or the bottom, and I should have just waited. Like half of the time, I look back and I'm thinking, holy crap, that was max pain. And I think max pain is probably what you're feeling right now is you're just wanting to get rid of that pain. And I think what Dallas was saying is just doing the same strategy, just letting it inching your way up, I think is going to be what's going to get you out of this. And then eventually buying a close at a smaller loss during the next correction, which I think might happen by the time the elections come around. By year end, we're going to have a correction. I think I wouldn't be surprised if we saw under 30. I mean, it corrected to the top, too many FOMO people buying in. It's going to be swinging up and down like crazy this whole time. So my number one and number two and number three goal is to stay in the stock. So that's why for me, I'm just selling on 10, 20% of the position, and I'm not gonna break that rule, for no reason. I would rather buy puts as a hedge than I would rather start selling more covered calls or even sell shares. I would rather just buy a couple puts as a hedge.
Right. I'm trying to find this guy where he keeps calling me fat. Dude, it's funny. I mean, it's funny. I can't find it now that I'm looking for it, dude. It sucks.
But I know the account because I remember when I looked them up, he left me like a hate comment months ago, but I didn't
Oh,
respond.
you know who he is? Moron, something moron.
Yes,
Market
yes,
moron.
market clowns, market morons, or something. And he,
Yeah, Market Morons does not like me, bro. Let me see if I can find his ass. Market Moron. I think that's what it is.
yeah, let's see,
So is this Carlo at Market Moron, maybe?
market clown.
He's got like a clown. He's got like a clown thing, right? Something like
Yep.
that. How would I go through the thing to look for a specific comment?
I think I found it.
Okay. Which one is
he's,
it?
he's protecting his account. It looks like he locked his account. Yeah,
So
it's called his username. If you go to the top to search, just type in market clowns.
Market clowns. Okay.
Yeah, but it looks like he's protecting his account. So
This is it. This is it.
That's the guy. That's the guy. Yeah, but you can't see it because he either got reported or for some reason he's keeping his
No,
account.
but this can't be the one because this guy had like he had followers. He had like 100 or 200 followers, but
That's what they do. When you deactivate your account, it kind of messes with your follower count. But that's the guy. That's the one.
Yeah, dude. So I don't know if he went to my hometown and it could have been that because I didn't sleep with anybody in high school. Maybe in college, I do remember. I mean, I'm not proud of this story, but I do remember sleeping with my roommate's brother's girlfriend. I don't know, maybe he could be the guy. I'm just saying, this is personal, dude. This dude does not like me.
But to be completely honest, I think they just find kind of some of the big accounts on Twitter, accounts that have either clout or they have connections, and they just start talking shit on all of them. They just start leaving messages on all of them, leaving hate messages. They really just spread the hate.
It's comical though, dude. I mean, dude, Twitter is highly entertaining, bro. Like legit.
Well, Elon called it the PvP, like player versus player platform. You're not just posting. You're not just posting to a bunch of fairies and a bunch of positivity. You're out there in the arena. Probably crossroads. Like you're in the arena. There's gonna be some people, some real haters on there, and they're not afraid to let it be known. Yeah.
Yeah. So I'm just. I guess my thing is this. I've already made a lot of money on cash curve, but just to summarize, and I mean it's 3 hours. I think we're good here. Here's the thing. I've already locked in a 6-figure realized win on Palantir.
Yep.
I don't know that I'm willing to give it back to save those 5,000 shares just to see Palantir tumble all the way down. What if Palantir gives me those shares back at $20-25? How stupid am I going to feel?
Yep.
So I think what I've learned is that I'm long Palantir unless it makes sense not to be. And on those 5,000 shares, I just need to treat it like any other cover call gone wrong because it's gone wrong before. It happened on Meta. I left a lot more money on the table with Meta, but there's zero emotional attachment to Meta because I don't like the stock. I don't think that I like Mark Zuckerberg actually. I don't like what Facebook is and does to people, and I don't. It's not a very useful for me. I think that it's very divisive. It's corrosive. I feel like it encourages people cheating on each other. It's almost like fuck book. It's just I don't find a lot of value in Facebook. I did early on. I don't anymore. So I don't have any type of emotional attachment to those shares or that company. Whereas with Palantir, I fell in love with the story and what they stood for from the very beginning.
Yep.
And I think so. So it almost feels like you're being a bit of a sellout because you ever sold one share of Palantir, but then now a TJ the Wheel deal is like, dude, you sold before the first time because the valuation didn't make any sense. You did it on a recommendation via text from Alan Shin, and you didn't give a shit. And then when Palantir came back down to areas that made sense, y'all saw the first batch of cover calls. They were like at 650.
Yeah.
Or 850, whatever it was, right? So I think that it's I'm gonna go
especially
back.
given that it is, and I think especially that it's not your entire position that's getting called away. So it's not going to sting nearly as much because you have, because you said, it's a fourth of it. So honestly, it wouldn't even be a loss. It would just be you're just kind of dampening a little bit of the win, but you're not losing your entire position. So I think at the end of the day, it's still a win. So I think it is just going to have to be more like the psychology of having to be okay with.
Yeah.
Because what year do they expire? Like what's the expiration on those? January
25. Yeah. Oh,
Dude, so it's coming up. It's just coming up in a couple months then.
Yeah, 100 days.
Yeah, so you're almost done. I think I think so. I think it might just be best to just
because this could then here brings me to the other part. The only reason I rolled these was to finance these.
Mm-hmm.
If it hadn't been for that, I wouldn't have rolled these because they weren't in jeopardy.
Yeah.
You know what I mean? Like they weren't in jeopardy. Even at the 30, they were still at the 30. We just pull up the thing, we pull up the what do you call it? There was still a extrinsic value there. If I go to the 30s over here, you're still, dude, there's like $1.
Yeah.
There's $1 there. So I wouldn't have rolled yet. I would have milked it. I'm still collecting a penny a day, $1 a day. You know what I mean? Yeah. So I would have waited at least another month or two before rolling. Granted, it's an 80 delta. That part sucks. But I would have tried to collect as much data as I could before I rolled. And then I would have gone, depending on what's going on with Palantir at the time, how many more contracts, et cetera, what's going on with the macros. Now we have more information with rate cuts, et cetera. Then I'm probably not putting the 35 handle. The only reason I put a 35 handle on those was that I could have the money to finance the $12 roll. I would have put a 40 handle on these.
Yeah.
And fix the trade. It would have been about premium. It would have been about, I want to be qualified for capital appreciation. That way, when I look at this number, it's real. If that makes sense.
Yeah.
Because right now it's not real from the standpoint that there's $1 or $2.23 on 15,000 shares that I'm not qualified for. Does that make sense?
Yep. So
that's the thing. I would have tried to catch up to the stock because it wouldn't have been an issue on premium. It's just, if I could do it for easily a break even, I'm going to do that. That way I don't have to mess with this thing on dips. I could look at buying shares or selling puts and just kind of playing that game with it over and over. But I rolled the way I chose to roll so that I could finance these shares. But then I didn't realize that, hey, this, along with all the other premiums that I locked in along the way, I'm realizing some gains on Palantir that can make it. Let me give this angle to you guys. What if I look up in a year and I'm only up $250,000?
Mm-hmm.
I'm going to really be thankful for all those wins along the way because I rode the roller coaster up and now I'm riding it down again. And who knows how long it's going to take for it to go on this epic run again. Because guys, let's just call a spade a spade. The only thing Palantir is doing is getting back over here. That's all it's done. Because I sold right in here. I got in right away. Dude, I literally got in on the day of the DPO.
Mm-hmm.
And then I sold right in here. Somewhere here. And then it came back down and I felt real smart, but I didn't mess with it because I was already excited about other stuff, Bitcoin miners, etc.
Yep.
And then I started getting interested right over here somewhere. And then, we played that game ever since. So it's just done a big old U. You know what I mean? And it's right back, it's higher than it's ever been, essentially. But I think, I don't know if this is really right because I feel like the all-time high was like $38 for some reason. But anyway,
intraday, yeah. But it's over 3 hours. I'm gonna have to get going too.
yeah, me too. But hopefully you guys got value out of this segment because you're gonna get into some situations, man. And I think that it's real important that you're willing to look at it at all potential angles. And then the other thing is start planning your next move with the newfound capital.
Yeah.
If I choose to exit, where am I going to deploy that $60,000? It doesn't have to be in the same stock. That's the thing.
Shit. I mean, as of right now, top of my head, there's StoFi, PayPal, Tesla.
I'm very interested in Endovix as well.
Dude, like I haven't
And
kept
the
up.
premiums over there are really juicy, yo. Like, dude, it's crazy.
And with all the beepers and all the walkie-talkies blowing up in Israel or in Lebanon, it's like maybe, add for Enovix anti-explosive batteries. But
yeah. So anyway, man, I know this is a marathon session. Appreciate the people rocking. 992 people at least saw that we were live on X. I don't know how those metrics work. It's totally different than YouTube. We still have 51 people rocking on YouTube on my side, and you have 2 diehards on your side still. So that is pretty awesome. But anyway, this is another episode of Wheelers. It's been fun. I don't know if I'll ever get permission again because this is already like second or third one that we Joe Rogan it. You know what I'm saying?
Yeah.
So. TJ the Wheel Deal signing off with Dallas and Bill White and Garcia Capital over here as always. May your sky stay blue, stock screen. Peace out. God bless you guys.
Peace out. God bless you, TJ.
Appreciate you, man.